Hello, everyone, and welcome. I'm excited to be here today to talk about our upcoming Sunday test on GFR 2017. Today's presentation is titled Sunday Test on GFR 2017, and it's scheduled for March 8, 2025. In this session, we'll cover the key aspects of the GFR 2017 guidelines, including updates, clinical applications, and important considerations. I'll keep it brief but informative, so let's get started and explore what this test entails and why it's so important. So let's talk about how the financial year is defined according to the general financial rules. Essentially, the financial year is a specific 12-month period that organizations use for accounting and reporting purposes. Now, among the options, the most common and recognized period is from the 1st of July to the 30th of June. This is widely used in government accounting and helps maintain consistency across the fiscal operations. The other options, like from 1st November to 31st October or from 1st January to 31st December, are not the standard in this context. And the financial year from 1st April to 31st March is used in some countries or sectors. But specifically, according to the general financial rules, the correct definition is the period starting on July 1st and ending on June 30th. Understanding this is crucial because it aligns the financial activities, budgeting, and reporting processes within that specific timeframe, ensuring clarity and uniformity across departments. So, when we talk about the fiscal year in this context, remember that it runs from July 1st to June 30th. The correct answer here is from 1st April to 31st March. This period is significant because it represents the typical financial year in many organizations, especially in countries like the UK and India. It's important to note that this timeframe is used for accounting, financial planning, and reporting purposes. When we talk about fiscal years, understanding the start and end dates helps us align our budgets and financial statements accurately. So, whenever you're preparing reports or planning budgets, keep in mind that this period, from April 1st to March 31st, is the standard cycle we usually work with. It's a crucial concept because it ensures consistency and comparability across different financial periods. Now, let's look at which ministry has the authority to modify the systems and procedures established by the general financial rules. The options include the Ministry of Defense, the Ministry of Finance, the Ministry of Law, and the Ministry of Corporate Affairs. The correct answer is the Ministry of Finance. This is because the general financial rules are primarily related to financial governance and management, which fall under the jurisdiction of the Ministry of Finance. Understanding which ministry holds this power is crucial, as it highlights how financial policies and procedures are governed and adapted in line with changing needs and regulations. This connects to our broader theme of financial oversight and accountability within government operations. So, when we talk about modifying financial systems and procedures, it's the Ministry of Finance that has the authority to do so, ensuring that financial governance remains streamlined and effective. The correct answer here is the Ministry of Finance. This is a key institution because it plays a central role in managing the country's financial policies, budgets, and economic planning. When we talk about government functions related to money, taxes, and fiscal stability, the Ministry of Finance is usually at the core. Throughout this presentation, we've been emphasizing how different government agencies work together to ensure economic stability and development. Recognizing the Ministry of Finance as the correct answer highlights its significance in implementing policies that impact everything from public services to national economic growth. So, understanding its role helps us better grasp the overall structure of government financial management. Let's talk about the standards of financial propriety that an officer must observe when dealing with expenditure and the payment of money from public funds. First, it's important to remember that the expenditure should never be more than what the occasion genuinely demands. In other words, spending should be necessary and justified, avoiding any unnecessary or excessive costs. Next, every officer has a duty to exercise the same vigilance over public money as any prudent person would over their own. This means carefully scrutinizing expenses to ensure they are appropriate, justified, and within the scope of what is required for the task at hand. It's about maintaining integrity and accountability in managing public funds. Another key point is that no authority should have the power to sanction expenditure in a way that benefits itself, either directly or indirectly. This is crucial for preventing conflicts of interest and ensuring that decisions are made purely in the public interest, not for personal gain. And finally, all of these principles, ensuring reasonable expenditure, exercising vigilance, and avoiding self-benefiting decisions, tie together under the broader concept of maintaining transparency and propriety in financial management. These standards are essential for building trust and upholding the integrity of our public financial systems. The correct answer here is all above. And what does that really mean in this context? Well, it indicates that all the options we've discussed are valid or applicable. It's a way of emphasizing that multiple factors or points are correct simultaneously. This ties back to our overall theme of comprehensive understanding. Sometimes, issues or solutions aren't just one thing or another, but a combination. So, when you see all above, think of it as a reminder to consider the bigger picture and recognize the interconnectedness of the points we've explored. It's an important concept because it encourages us to look at all aspects rather than focusing narrowly on just one. Now, let's discuss who is responsible if the expenditure exceeds the allocated budget. First, we have the accounts officer in charge of the budget. They play a crucial role in monitoring and managing the financial resources, so any overspending typically falls under their purview. Next is the controlling officer, who is ultimately responsible for ensuring that expenditures stay within approved limits. Then, there's the head of office, who oversees the overall functioning and compliance with financial policies. Lastly, the assistant in charge of budget expenditure assists in day-to-day financial activities and monitoring. Understanding these roles helps us see how accountability is distributed across different levels, ensuring proper management and oversight to prevent overspending. This ties back to our overall theme of responsible financial governance, emphasizing the importance of clear responsibilities and accountability in budget management. The correct answer here is controlling officer. This is a crucial role because the controlling officer is responsible for overseeing the implementation of policies and ensuring that procedures are followed correctly. They act as the primary point of accountability within a department or project. Understanding who the controlling officer is helps clarify lines of responsibility and authority, which is vital for effective governance. Throughout this presentation, we've emphasized the importance of clear roles and responsibilities, and the controlling officer is a key component of that framework. They ensure that resources are used appropriately, and that objectives are achieved in accordance with regulations and standards. So, whenever you're dealing with official procedures or accountability measures, keep in mind that the controlling officer is the main person overseeing the process. When a subordinate authority notices a loss or shortage of public monies, departmental revenue, stamp, opium, stores, or similar items, it's crucial to report it to the appropriate authority. Now, the question here is, to whom should such a report be made? Is it the statutory audit officer, who is responsible for overseeing audits and ensuring financial compliance? Or perhaps the next higher authority, who has the oversight over the subordinate's work? Or could it be the principal accounts officer, who handles the financial accounts and related issues? Actually, the correct answer is all of the above. Each of these authorities has a role to play in the reporting process, depending on the specific circumstances and the nature of the loss or shortage. This highlights an important point about the accountability framework within our financial management system. It ensures that issues are escalated appropriately and handled efficiently. Understanding this chain of reporting helps us maintain transparency and integrity in managing public funds, which ties back to the overall theme of financial discipline and accountability in public administration. The correct answer here is all of the above. What that means is that each of the options we've discussed is valid and contributes to the overall concept or solution we're exploring. It's a reminder that sometimes the best approach isn't just one thing, but a combination of multiple strategies or factors working together. When we consider all the options, we're more likely to arrive at a comprehensive and effective answer. So keep in mind that in many situations, the right choice is often a combination of several elements, not just one. This aligns perfectly with the overall theme of thoroughness and holistic thinking that we've been emphasizing throughout this presentation. When there is a loss of government money due to an erroneous or irregular issue of a check, it's important to report this promptly. The key point here is that such losses should not be ignored or left unaddressed. Instead, they must be reported to the appropriate authorities to ensure proper accountability and corrective action. Now, the question is, who exactly should be informed? The first point is the head of the department, because they are responsible for the overall functioning of their department and need to be aware of any financial irregularities. Next, the head of office also needs to be notified, as they oversee day-to-day operations and can facilitate immediate corrective measures. The third authority is the Controller General of Accounts, who is responsible for maintaining the accounts and ensuring financial discipline across government operations. Lastly, the Controller and Auditor General, or CAG, is the ultimate authority for audit and accountability. Reporting to these officials helps maintain transparency, accountability, and proper management of public funds. This process reinforces the importance of vigilance and proper reporting mechanisms within government financial procedures, which is essential for upholding the integrity of our financial management system. The correct answer here is the Controller General of Accounts. This is a key position within the government's financial management system. The Controller General of Accounts is responsible for overseeing the preparation of the government's accounts and ensuring financial transparency and accountability. They play a crucial role in maintaining financial discipline and providing accurate financial reports that support decision-making at the highest levels. Understanding this role helps us appreciate how government finances are managed systematically and transparently, which ties into our broader discussion on effective financial governance. All right, let's talk about what a financial year actually is. Essentially, it's a 12-month period that a business or organization uses for accounting purposes. Now, the most common and familiar one is from January 1st to December 31st, aligning with the calendar year. However, some companies choose different periods to better suit their operations. For example, a financial year could run from July 1st to June 30th, which might match their industry cycle or regional practices. Another option is from April 1st to March 31st, which is often used in countries like Australia. The key point here is that the financial year is a dedicated 12-month span that helps in organizing financial statements, budgeting, and reporting. Understanding these different periods is important because it influences how we compare financial data across different organizations or countries. It ties into the overall theme of financial management and reporting, making it clear that choosing the right financial year is crucial for accurate and meaningful financial analysis. The correct answer here is from the 1st of April to the 31st of March. This is the typical financial year used in many organizations and countries. It's important because it defines the period over which financial activities are measured and reported. Understanding this timeframe helps us ensure that all financial statements and reports align correctly, giving us a clear picture of the organization's performance over the year. Connecting this to the overall theme, recognizing the correct financial year period is crucial for accurate budgeting, planning, and compliance. So, always keep in mind that the financial year runs from April 1st to March 31st. So, let's talk about who is responsible for submitting the budget of the central government before both houses of Parliament, and this needs to happen before the start of a new financial year. The correct answer here is the Finance Minister of India. It is the Finance Minister who prepares and presents the budget, outlining the government's revenue and expenditure plans. This process is vital because it sets the financial priorities for the country and ensures transparency and accountability. It's important to note that while the Prime Minister and the President play crucial roles in the government's functioning, They are not responsible for submitting the budget. Similarly, the Speaker of the Lok Sabha facilitates the proceedings but does not prepare or present the budget. Understanding this process is essential because it highlights how financial oversight is structured in our parliamentary system, ensuring that the government's financial plans are scrutinized and approved by the elected representatives. This step is a key part of the broader theme of fiscal responsibility and democratic accountability in governance. The correct answer here is the Finance Minister of India. This role is crucial because the Finance Minister is responsible for managing the country's economic policies, budget, and financial regulations. They play a key part in shaping the nation's economic growth and stability. Recognizing the Finance Minister helps us understand who holds the authority over India's financial decisions and policies. Throughout this presentation, we've been exploring the structure of government and key officials, and this slide highlights the importance of identifying the right person in charge of finance. So remember, the Finance Minister of India is the correct answer when considering who oversees the country's economic management. Now, let's look at which articles of the Indian Constitution lay down the provisions for the preparation, formulation, and submission of the budget to the Parliament. The correct answer is the second option, Articles 112 to 116. These articles specifically deal with the financial processes, including the budget's preparation and presentation. Articles 112 to 116 outline the constitutional framework for the annual financial statement, the budget, and related procedures. It's important to understand these articles because they form the legal basis for how the government manages its finances and ensures transparency and accountability in the budget process. So, whenever we talk about the budget cycle in India, these articles are central to our understanding. The correct answer here is Articles 112 to 116. These articles are quite important because they outline the specific provisions related to this particular aspect of the legal framework. In essence, they detail the rights, responsibilities, and procedures that are applicable. What's crucial to remember is that these articles help ensure clarity and consistency in the application of the law, which ties back to our overall theme of understanding the legal structure and how it functions to protect and regulate various interests. So, when you see references to Articles 112 through 116, think of them as the core section that provides detailed guidance on this topic. All right, let's talk about when the railway budget started to be included with the general budget. The question here is, from which financial year did this integration begin? The options are 2017-18, 2016-17, 2018-19, or 2015-16. This is an important point because it marks a significant shift in how the government presents its financial planning. Previously, the railway budget was separate, highlighting its unique importance. But starting from a certain year, it became part of the overall budget, reflecting a move towards a more unified and streamlined approach. The correct answer is 2017-18. This change was aimed at increasing transparency and giving a clearer picture of the government's total expenditure and revenue. So, remember, from the 2017-18 financial year, the railway budget was merged into the general budget, marking a key development in budget presentation practices. The correct answer here is 2017-18. This period is significant because it marks a notable point in our timeline, reflecting important developments or milestones we've been discussing. When we look at this timeframe, it often highlights key achievements or changes that have had a lasting impact. Recognizing this specific period helps us understand the context and progression within our overall narrative. Remember, identifying the correct years or data points like this is crucial because it anchors our understanding of the trends and patterns we've been analyzing throughout the presentation. So, keeping this timeframe in mind will help us connect the dots as we move forward. Once the estimates for the budgetary allocation are finalized by the Department of Expenditure, it's essential to consider whose consultation is necessary to prepare the final outcome budget statement. This step ensures that all key stakeholders are involved in the process. Primarily, the Prime Minister of India plays a crucial role, as the budget reflects the government's priorities and policy directions at the highest level. Next, The President of India's consultation is also vital, given the constitutional role in approving the budget and ensuring it aligns with national constitutional principles. NITI Aayog, as the policy think tank and the central body responsible for strategic planning, provides valuable input to ensure that the budget aligns with long-term development goals and policies. Additionally, the Vice President of India has a consultative role, especially in the context of parliamentary oversight and approval processes, ensuring the budget's alignment with legislative expectations. Connecting all these points to the overall theme, it's clear that preparing and finalizing the outcome budget is a collaborative effort involving key constitutional and institutional authorities, which helps in maintaining transparency, accountability, and strategic coherence in public financial management. The correct answer here is NITI Aayog. As many of you might know, NITI Aayog stands for the National Institution for Transforming India. It was established in 2015 to replace the Planning Commission, with the aim of fostering cooperative federalism and encouraging innovative, sustainable development. Unlike the Planning Commission, which was more top-down, NITI Aayog emphasizes a more participative approach, involving states directly in policymaking. This shift reflects a broader move towards decentralization and tailored solutions for different regions. Connecting this to our overall theme of governance and development, NITI Aayog plays a crucial role in shaping India's strategic plans for economic growth and social progress, aligning national objectives with regional needs. When a drawing and disbursing officer, or DDO, processes a bill that includes charges falling under 2 or more object heads, the question is, what procedure should be followed? Now, the first option suggests distributing charges accurately over the respective object heads. This is actually the correct approach, because it ensures that each head gets its fair share based on the actual expenses. The second option mentions distributing charges equally among the different object heads, but this isn't ideal because it might not reflect the true allocation of costs. The third option involves classifying charges under the head with the higher share, which could distort the actual expense distribution. And the fourth option suggests classifying the entire bill under only the major head, but that oversimplifies the allocation process and can lead to inaccuracies. So the key takeaway here is that, for proper financial management and accountability, charges should be distributed accurately over the respective object heads. This maintains transparency and ensures each head is charged correctly, aligning with good financial practices and the overall theme of responsible budget management. The correct answer here is that the bill should be classified only under the major head. What this means is that when we're categorizing bills for accounting or reporting purposes, we need to ensure they are placed correctly within the primary category, or the major head. This helps maintain clarity and consistency in financial documentation. It's important because misclassification can lead to inaccuracies in financial analysis or reporting. So the key takeaway is that each bill, to adhere to proper standards, should be assigned solely to its appropriate major head, avoiding unnecessary subdivisions unless specifically required. This aligns with the overall goal of maintaining transparent and accurate financial records. Now, let's discuss who is responsible for maintaining the library register to ensure proper control over expenditure. The key person here is the controlling officer, who has the primary responsibility for this task. But it's also important to understand that the head of office plays a significant role in overseeing this process. Additionally, the drawing and disbursing officer, or DDO, is directly involved because they handle the actual disbursement of funds and must keep accurate records. Lastly, the pay and accounts officer contributes by maintaining the financial records and ensuring everything aligns properly. So, when we talk about maintaining the library register for effective expenditure control, it's really a shared responsibility among these roles, with the controlling officer leading the effort. This ensures transparency, accountability, and proper financial management within the organization, which ties directly into our overall goal of sound financial governance. The correct answer here is the controlling officer. Now, it's important to understand that the controlling officer is essentially the person responsible for overseeing a specific area or department. They ensure that everything runs smoothly and that the activities align with the overall policies and objectives. This role is crucial because it helps maintain accountability and proper management of resources. Throughout this presentation, we've emphasized the importance of clear responsibilities and effective oversight. The controlling officer plays a key part in that framework, ensuring compliance and efficient operation within their scope. So, recognizing who the controlling officer is helps us understand who holds the ultimate responsibility for the area in question. Now, let's look at who is authorized to approve excess expenditure beyond the allotted budget. First, the Chief Accounting Authority holds the primary responsibility here. This means they have the ultimate say when it comes to approving amounts that go over the initial allotment. Next, the head of office also plays a crucial role, especially in ensuring that any excess expenses are legitimate and necessary. The Drawing and Disbursing Officer, or DDO, is another key figure. Since they handle the actual disbursement of funds, their approval is essential for any overspending. Lastly, the account officer of the budget section is involved to ensure that all excess expenditures are properly recorded and justified within the financial framework. Understanding who has the authority for approval helps us maintain proper control over our finances and ensures transparency. Remember, these roles are interconnected in safeguarding the integrity of our financial management, aligning with our overall goal of accountability and effective resource utilization. The correct answer here is the Chief Accounting Authority. This is the person or body responsible for overseeing the accounting functions within an organization. They play a crucial role in ensuring that financial reporting is accurate, compliant with standards, and transparent. Think of them as the ultimate guardian of the organization's financial integrity. Connecting this to our overall theme, having a clearly designated Chief Accounting Authority helps establish accountability and trust, which are vital for effective governance and decision-making. So, recognizing who holds this role is key to understanding how financial oversight is maintained in any organization. Now, let's consider whose order is necessary to authorize any payment by the disbursing officer if the amount exceeds the funds at his disposal. First, it's important to note that no special order is needed in some cases, but generally, the disbursing officer must have proper authorization. Typically, this authority comes from the administrative authority to which he is subordinate. This means that the officer relies on instructions or approval from their immediate superiors within the administrative hierarchy. Next, the accounts officer plays a crucial role here, as they are responsible for verifying and endorsing payments, especially when amounts go beyond the available funds. Their approval acts as a safeguard for proper financial control. Additionally, the Finance Ministry is involved in overarching financial governance, but the primary authority to approve excess payments usually rests with the administrative authority and the accounts officer. Understanding these layers of authorization is essential because it ensures accountability and proper control over public funds, which ties directly into our broader theme of financial discipline and transparency in public administration. Let's take a closer look at what correct answer, administrative authority to which he is subordinate, really means. Essentially, this refers to the chain of command within an organization or a government structure. When we talk about administrative authority, we're talking about the power or the right to make decisions, give orders, and enforce rules within a specific area. Now, the key point here is that this authority is not just any power. It's the authority to which a particular individual or entity is subordinate. In other words, every person or department operates under the authority of a higher administrative body. This creates a clear hierarchy. Think of it like a ladder, where each rung has its specific responsibilities and limits. Understanding this concept is fundamental because it clarifies who is responsible for what and ensures that there's accountability within the system. It also helps prevent confusion or overlap of authority, which can lead to inefficiencies or conflicts. Connecting this to our overall theme, recognizing the correct administrative authority is vital for effective governance and management. It ensures smooth operations and helps maintain order by clearly defining who reports to whom and who has decision-making power at each level. So, in any organizational or governmental setting, identifying the correct authority to which someone is subordinate is a crucial step in maintaining a structured and effective system. Now, let's move on to slide 32 of 201. Here, we're discussing what the primary unit in a grant of appropriation really means. The question asks us to identify the correct definition among 4 options. The first option is the major head of account, which is essentially the broadest category of expenditure. The second is the minor head of account, which narrows things down further within the major head. The third option is the object head of account, which classifies expenditure by its nature or purpose. And finally, the last option is none of the above. Understanding this is important because when we allocate funds, knowing what the primary unit is helps in organizing and tracking expenditures accurately. Usually, in the context of government finance, the primary unit refers to the major head of account. This is because it provides the broadest classification and serves as the main category under which smaller heads and detailed objects are grouped. So, the key takeaway here is that the primary unit in a grant of appropriation is the major head of account, which helps in maintaining a clear and hierarchical financial structure. This concept is central to effective financial management and accountability in public finance. So the correct answer here is object head of account. What that means is that in accounting, particularly when we're dealing with financial transactions, the object head of account is essentially the primary classification or category where the transaction is recorded. It helps us identify what the expense or income is related to. This is crucial because it ensures that all financial data is organized properly, making reporting and analysis much more straightforward. Remember, this concept ties back to the overall theme of maintaining accurate and transparent financial records, which is fundamental in any sound accounting system. So, when it comes to preparing the accounts of the union government each year, there are specific officials responsible for this task. The key question here is, who exactly prepares these accounts that detail the receipts, disbursements, and the overall financial health of the government? The correct answer is the Finance Secretary. They play a central role in overseeing the financial operations and ensuring that the accounts accurately reflect the year's financial activities. Alongside them, the Controller General of Accounts is also involved, as they compile and maintain the detailed records of government transactions. It's important to note that the Chief Accounting Authority, which refers to the Finance Ministry or Department, is responsible for the overall financial management and ensuring proper accounting procedures are followed. Now, who else might be involved? Sometimes, the Prime Minister's office is informed or involved in high-level financial decisions, but the actual preparation of the accounts is primarily the responsibility of these financial authorities. So, in summary, the key figures responsible for preparing these annual accounts are the Finance Secretary and the Controller General of Accounts, ensuring transparency and accountability in government finances. This process is vital for assessing the government's financial position, whether there's a surplus or deficit, and understanding changes in liabilities and assets. The correct answer here is the Controller General of Accounts. This position is crucial within our financial management system. Essentially, the Controller General of Accounts is responsible for overseeing the accounting and financial reporting of the government. They ensure that all financial transactions are accurately recorded and in compliance with established rules and regulations. This role is vital for maintaining transparency and accountability in public finances. Connecting this to our overall theme, understanding the function of this position helps us appreciate how financial integrity is maintained at the highest levels of government. It's a key component in ensuring effective financial governance and public trust. Now, moving on to slide 36 of 201, let's discuss the process of submitting the report of the Controller and Auditor General, or CAG, along with the accounts of the Union government. Once the CAG completes the audit, their report, which provides crucial insights into the financial management of the government, is formally submitted. This submission is made to several key authorities, but most importantly, it is presented to the President of India. The President then forwards these reports to the relevant ministries and parliamentary committees for scrutiny. It's also important to note that the report is shared with the Prime Minister and the Finance Minister, as they play vital roles in the government's financial oversight and decision-making. Additionally, the Controller General of Accounts, who manages the government's accounts, is involved in this process to ensure transparency and accountability. This process underscores the importance of accountability in public finance and highlights how the CAG's work helps keep the government's financial activities transparent for Parliament and the public. It's a crucial step in maintaining trust and integrity in our system of governance. The correct answer here is President of India. This slide emphasizes the importance of understanding who holds the highest constitutional authority in our country. The President of India is the head of state, symbolizing the unity and integrity of the nation. Recognizing this role helps us appreciate the structure of our government and the distribution of powers. Throughout this presentation, we've been exploring the key positions and their functions within our system, and the President of India stands out as the ultimate constitutional figure. It's crucial to remember that this role, while largely ceremonial, also carries significant responsibilities and powers as defined by the Constitution. Now, let's talk about where the accounts of the Government of India are maintained. The correct answer here is all of the above. First, we have the Consolidated Fund, which is essentially the main account that handles all revenues received by the government and expenditures made by it. This is the primary fund used for most government transactions. Then, there's the Contingency Fund, which is set aside for unforeseen expenses or emergencies that require immediate funding. It's a kind of safety net for urgent needs. Lastly, the public account is where minor heads and miscellaneous transactions are recorded, including deposits made by individuals or organizations. So, in summary, the government keeps its accounts across these three key funds, ensuring transparency and proper management of public finances. This interconnected system helps maintain financial discipline and supports overall fiscal stability. All right, so the correct answer here is all of the above. What this really highlights is that in many situations, multiple factors or options come into play, and it's not just a single answer that fits. It's important to recognize that often, the best solution or understanding involves considering all these aspects together. This ties back to the overall theme of the presentation, which is about comprehensive analysis and avoiding oversimplification. When we look at complex problems, embracing all relevant elements leads to more effective and well-rounded decisions. So, in this case, choosing all of the above reflects that holistic approach. Now, let's take a closer look at the types of transactions that occur in the public account of India. First, there are transactions related to debt, which include borrowing by the government to fund various projects and manage the economy. These are crucial because they influence our country's financial stability and growth. Next, we have revenue transactions, which involve the income the government earns from taxes, fees, and other sources. These revenues are vital for funding public services and development programs. Then, there are expenditure transactions, covering the spending by the government on infrastructure, social welfare, defense, and more. Proper management of these expenditures ensures that resources are used effectively for the benefit of the nation. Lastly, we have contingency transactions, which are set aside for unforeseen events or emergencies, like natural disasters or sudden economic crises. These transactions help the government respond swiftly to unexpected situations. Overall, understanding these different types of transactions helps us appreciate how the public account functions to support the nation's financial health and development. The correct answer here is related to debt. When we talk about debt in this context, we're really focusing on the obligations that individuals or organizations have to repay borrowed money. It's a key concept because understanding debt helps us grasp how financial responsibilities are managed and how they can impact overall financial health. Recognizing what relates to debt allows us to make better decisions, whether we're managing personal finances or assessing a company's financial stability. Throughout this presentation, keep in mind that debt plays a central role in financial planning and risk management. All right, let's dive into identifying which expenditure does not fall under the purview of revenue expenditure. Now, as we go through this, remember that revenue expenditure generally covers day-to-day expenses that are necessary for the ongoing operations of an organization. These are expenses like salaries, wages, and operational costs that help keep the organization running smoothly. First up, salaries, wages, and other employee-related expenses are classic examples of revenue expenditure because they are recurring costs essential for daily functions. Similarly, grants and aid are often considered revenue expenses, especially when they are given to support ongoing programs or services. Travel expenses also fall into this category because they are incurred regularly to facilitate operations, meetings, or fieldwork. Now, the key point here is the acquisition of tangible assets. Unlike the other expenses we've discussed, acquiring tangible assets, like machinery, buildings, or equipment, is not classified as revenue expenditure. Instead, these are capital expenditures because they represent investments in long-term assets that will benefit the organization over many years. So, to sum up, while most of the listed items are typical revenue expenses, the acquisition of tangible assets clearly stands out as not being part of revenue expenditure. It's a capital expenditure, reflecting investment in the organization's future. This distinction is crucial for understanding how expenses are categorized for financial reporting and planning. The correct answer here is the acquisition of tangible assets. Now, this is a key concept because it involves the actual physical assets that a company owns, like machinery, buildings, or inventory. These assets are essential for operations and often represent significant investments for a business. When we talk about acquiring tangible assets, we're referring to the process of purchasing or gaining control over these physical resources to support growth or improve efficiency. Understanding this helps us see how businesses manage their resources and how they record these transactions in their financial statements. It ties into the overall theme of financial management and strategic planning, emphasizing the importance of tangible assets in building a company's value and capacity. So, let's move on to an important question about the banking system in India. Who is actually the banker of the government of India? Now, you might be tempted to think of a commercial bank, but the correct answer is the Reserve Bank of India. That's because the Reserve Bank acts as the central bank, overseeing all monetary policy and financial stability in the country. It's responsible for managing the government's accounts, issuing currency, and regulating other banks. While banks like the State Bank of India, Indian Bank, and Union Bank of India are crucial for day-to-day banking services, they are not the government's banker. Instead, the Reserve Bank of India plays this key role. Recognizing this helps us understand the structure of our financial system and how the central bank supports the economy. So remember, the Reserve Bank of India is the banker to the government of India. The correct answer here is the Reserve Bank of India. This is a crucial point because the Reserve Bank of India, or RBI, is the central banking institution of the country. It plays a vital role in regulating and supervising the financial system, managing currency issuance, and ensuring monetary stability. Throughout this presentation, we've emphasized the importance of understanding key financial institutions, and the RBI is at the core of India's banking and financial framework. Recognizing its functions helps us appreciate how monetary policy is implemented and how financial stability is maintained in the country. Now let's move on to slide 46 of 201. Here, we're looking at the full form of PFMS. The options are 1. Permanent Finance Management System, 2. Public Financial Management System, 3. Public Finance Monetary System, and 4. Prime Minister's Finance Measurement System. The correct answer is the second one, Public Financial Management System. This is a crucial platform used by the government to track and manage public funds efficiently. It ensures transparency, accountability, and proper allocation of resources. Understanding what PFMS stands for helps us appreciate its role in streamlining financial processes across various government departments. It ties into our overall theme of effective financial governance and the importance of digital systems in enhancing transparency. So remember, PFMS is the Public Financial Management System, a vital tool in modern governance. The correct answer here is the Public Financial Management System. This is a critical component because it encompasses the processes and mechanisms that governments use to manage public resources effectively and transparently. When we talk about a robust public financial management system, we're referring to how budgets are prepared, executed, and monitored to ensure funds are used efficiently and for their intended purposes. It also includes accounting, reporting, and auditing practices that provide accountability. Overall, this system is fundamental to good governance and helps build trust with citizens, investors, and international partners. Connecting this to our broader theme, strengthening the public financial management system is essential for sustainable development and fiscal stability. Let's explore the benefits that beneficiaries receive directly through the government under the Direct Benefit Transfer System. First, there are cash benefits provided directly from various ministries and departments. These are monetary transfers aimed at supporting individuals in need. Second, in addition to cash, there are in-kind benefits, which are provided through implementing agencies. These could include items like food grains, subsidies, or other goods that meet specific needs. Now, sometimes beneficiaries might receive only cash or only in-kind benefits, but in many cases, they might receive both. So, the correct answer here is both of the above. This system is designed to ensure that aid reaches people efficiently and transparently, aligning with the overall goal of making government assistance more effective and accessible. So the correct answer here is both of the above, and let's unpack what that really means. Essentially, it highlights that in this context, more than one option or approach can be correct. It's a reminder that sometimes solutions or answers aren't just black and white. Instead, they can involve multiple factors working together. This ties back to the overall theme of the presentation, which emphasizes the importance of a comprehensive understanding and considering all relevant aspects when making decisions or analyzing a situation. Recognizing that both options are valid encourages us to think more holistically and avoid overly simplistic conclusions. So, when you see both of the above, remember, it's about appreciating the complexity and interconnectedness of the concepts we're discussing. Now, let's look at who countersigns the government's annual accounts, also known as the finance accounts, which are prepared by the Comptroller and Auditor General, or CGA. This is a crucial step because it signifies the official approval and validation of the financial statements. The correct answer here is the Finance Minister. When the finance accounts are prepared, they are countersigned by the Finance Minister, indicating his or her responsibility for the accuracy and integrity of these accounts. It's important to understand that this countersignature connects to the broader theme of accountability in public financial management. While the CGA prepares and audits the accounts, the formal approval by the Finance Minister underscores the political and administrative responsibility for the government's financial operations. So, to sum up, the key point is that the finance accounts, after being prepared by the CGA, are officially countersigned by the Finance Minister, ensuring that the financial statements reflect the government's true financial position and are ready for presentation to Parliament and the public. The correct answer here is the Secretary of Expenditure, Ministry of Finance. This position plays a crucial role in overseeing government spending and ensuring fiscal discipline. It's important because it helps manage the allocation of resources across various departments and programs, maintaining the financial health of the country. Throughout this presentation, we've emphasized the importance of strong financial governance, and the Secretary of Expenditure is central to that effort. They coordinate closely with other financial authorities to ensure that expenditures are efficient, transparent, and aligned with national priorities. So, understanding this role helps us appreciate how the government manages its finances effectively. Now, moving on to slide 52 of 201, let's discuss the process of submitting the certified annual accounts and reports. The key point here is that these accounts, after being prepared and audited, are submitted by the Controller and Auditor General of India. But who are they submitting these reports to? Well, primarily, they submit them to the President of India. This process is crucial because it ensures that the highest authority in the country is kept informed about the financial health and management of public resources. This step is part of the broader accountability and transparency framework within our governance system. It connects to the overall theme of oversight and proper management of public funds. The submission to the President also facilitates further review and action, if necessary, by the appropriate authorities. So, in essence, the Controller and Auditor General acts as a vital link in maintaining financial accountability at the highest level of government. The correct answer here is President. This highlights the importance of understanding key leadership roles, especially in the context of governance and decision-making. When we talk about leadership at the highest level, the President is often the figure who embodies authority, direction, and responsibility for the nation. Recognizing this role helps us appreciate how leadership functions within government structures and the impact it has on policy and society. Connecting this to our overall theme, understanding the role of the President is fundamental to grasping how leadership shapes the course of a country and influences its future. Now, let's move on to slide 54 of 201, which addresses the question: which rule governs the adjustment of accounts between the central government and the state governments? There are several rules that come into play here, but the key ones are the General Financial Rules, Central Treasury Rules, Delegation of Financial Power Rules, and Government Accounting Rules. First, the General Financial Rules provide a broad framework for managing financial transactions and ensuring consistency across the government. These rules lay down the principles for accounting, budgeting, and financial control, making sure that all transactions are transparent and properly recorded. Next, the Central Treasury Rules specifically deal with the procedures for handling cash, payments, and receipts at the central level. They guide how funds are managed and transferred, ensuring smooth financial operations between the central and state levels. Then, we have the Delegation of Financial Power Rules. These are crucial because they define who has the authority to approve expenditures and make financial decisions at different levels of government. This delegation helps in maintaining proper checks and balances and ensures accountability. Finally, the Government Accounting Rules set out the standards and procedures for recording, classifying, and reporting government financial transactions. They ensure uniformity and accuracy in financial reporting across all branches of government. Overall, these rules work together to ensure that the financial relationship between the central and state governments is managed transparently, efficiently, and in accordance with established legal and procedural frameworks. The correct answer here is Government Accounting Rules. These rules are essential because they set the standards for how government entities record and report their financial activities. Unlike private sector accounting, government accounting rules focus heavily on transparency, accountability, and the proper management of public funds. They ensure that the financial information presented is accurate and consistent, which is vital for public trust and effective governance. Understanding these rules helps us see how governments maintain fiscal responsibility and how their financial health is communicated to stakeholders. So, in the context of our overall discussion, recognizing the importance of these accounting rules underscores the unique nature of government financial reporting and the need for tailored standards in the public sector. So, let's move on to slide 56, which asks about the crucial date for the closure of intergovernment adjustments under the GFR. Now, this is an important point because it sets the deadline for when all adjustments between different government departments or entities need to be finalized. The options we have here are the 1st of March, the 1st of April, the 15th of April, or the 30th of April. Understanding this date is key to ensuring compliance with the financial regulations and maintaining transparency in government transactions. The most common and widely accepted deadline for closing these adjustments is typically the 1st of April. This allows enough time for reconciliation and reporting before the financial year ends. So the correct answer here is the 1st of April. Remember, meeting this deadline is crucial to ensure that all intergovernment financial adjustments are completed in a timely manner, supporting smooth fiscal management and accountability. The correct answer here is the 15th of April. This date is significant because it often marks a key deadline or milestone, depending on the context we're discussing. It's important to remember that pinpointing the right date can impact planning and decision-making, especially if we're working towards specific goals or compliance requirements. Throughout this presentation, we've emphasized the importance of accuracy and timing, and this date exemplifies that, showing how knowing the exact timeline helps us stay on track and avoid last-minute surprises. So, keeping the 15th of April in mind ensures we're aligned with our schedule and objectives. Now, let's look at this key question. Which of the following powers are delegated to subordinate authorities by the delegation of financial power rules? This is an important concept because it helps us understand the scope of authority that can be delegated down the line. First, we have the power to accord administrative approval. This means that subordinate authorities can approve certain administrative actions or projects within their limits. Next, there's the power to sanction expenditure, which allows them to authorize spending up to their delegated amount. Then, we see the power to reappropriate funds, meaning they can transfer funds from one head or project to another as needed. And finally, the correct answer here is all of the above. This indicates that subordinate authorities can be entrusted with multiple powers, which helps streamline decision-making and ensures efficiency in financial management. Connecting this to the overall theme, understanding delegation helps us maintain proper control while empowering authorities to act effectively within their limits. The correct answer here is all of the above. What this really emphasizes is that multiple factors or options can often be correct in complex scenarios. It's important to recognize that rarely is one thing the sole answer. Instead, a combination of elements usually plays a role. This ties back to our overall theme of comprehensive understanding, seeing the bigger picture rather than focusing narrowly. So, whether it's a process, a decision, or a problem, keeping in mind that all of the above might be correct encourages us to think more holistically and avoid oversimplification. Let's walk through the sequence of events involved in executing works, step by step. First, we start with preparing the detailed design and estimates, which is crucial for understanding what needs to be done and how much it will cost. Once we have the estimates, the next step is to get the necessary approvals, that is, issuing the administrative approval and sanctioning the expenditure. After securing approval, we move on to calling for tenders. For smaller works costing less than 5 lakhs, limited tenders are called, making the process more streamlined. Once the tenders are evaluated and the work is awarded, the next step is executing the contract agreement, formalizing the commitment between parties. Finally, after the work is completed, the last step is making the final payment for the work done. So, the correct sequence aligns with option 2, starting with the detailed design and estimates, then approval and sanction, followed by calling tenders, awarding the contract, and ending with the final payment. This sequence ensures a logical flow from planning to completion. All right, let's take a look at the correct answer sequence here. Roman 4, Roman 2, Roman 3. What this really highlights is the importance of understanding the specific order of these points, as it reflects the logical flow of the process we're discussing. First, we start with point I, which sets the foundation for the subsequent steps. Then, moving on to Roman 4, we see how that initial step connects to the next phase. Following that, Roman 2 and Roman 3 build on each other, emphasizing the progression and dependencies between these stages. Finally, V wraps up the sequence, showing how all these components come together to achieve the overall goal. Recognizing this order is key because it underscores the systematic approach needed for effective implementation and aligns perfectly with our broader theme of structured problem solving. Now, moving on to projects of rupees 100 crores, it's important to understand how variations in the approved estimates are managed. For these projects, the powers are vested with the administrative ministry or department itself. They have the authority to accept a variation in the approved estimate within certain limits. Specifically, they can approve adjustments up to 10%, 20%, 30%, or even 40%, depending on the circumstances. This means that if there are cost variations within these percentages, the administrative department can approve them without needing higher approval. This process helps streamline decision-making and keeps projects on track without unnecessary delays. It's a crucial aspect of project financial management, ensuring flexibility while maintaining control. This ties into our overall theme of efficient project oversight and effective resource management. The correct answer here is 10%. This figure highlights just how small a portion it represents within the larger context we're discussing. It's important to understand that this percentage can have significant implications depending on the specific area or industry we're focusing on. When we see a figure like this, it often prompts us to consider the factors that contribute to such a small share and what opportunities might exist to improve or influence that number. Connecting this back to the overall theme, it reminds us that even a seemingly modest percentage can be crucial, especially when we're working towards strategic goals or trying to identify areas for growth. Let's talk about which items do not fall under the definition of goods. First, we have furniture pictures and raw materials. Now, these are interesting because furniture pictures are essentially images, not physical goods, so they wouldn't typically be classified as goods in the traditional sense. Raw materials, on the other hand, are tangible goods used in manufacturing, so they are definitely considered goods. Next, we look at books, publications, and periodicals. These are physical items, so they clearly count as goods since they are tangible products that can be bought and sold. Then we have intangible products like software and patents. This is a crucial point because these are not physical objects, they're intangible. So, despite their commercial value, they don't fall under the usual definition of goods. Finally, we consider vehicles, aircraft, and ships. These are large, tangible, movable goods, so they are definitely included in the definition of goods. So, to sum up, the key takeaway here is that intangible products, such as software and patents, are the items that generally do not come under the purview of the traditional definition of goods. They are distinct because they're not physical objects, which makes them unique in commercial transactions. The correct answer here is books, publication, and periodicals. These are some of the most important sources of information, and they play a crucial role in research and knowledge dissemination. When we talk about books, we're referring to comprehensive sources that provide in-depth coverage on a wide range of topics. Publications, on the other hand, include newspapers and magazines, which offer current events and timely insights. Periodicals are a subset of publications that are issued regularly, such as journals or newsletters, and they are essential for staying up to date with the latest developments in a particular field. Recognizing these sources helps us understand where credible information can be found and how to access it effectively. This ties back to our overall theme of conducting thorough and reliable research by utilizing the right sources of information. Now, let's look at who is responsible for certifying and registering suppliers on the government e-marketplace, or the key players here include the Secretary of Finance, who has a crucial role in overseeing the process. Then, there's the Finance Minister, who also plays a significant part in ensuring proper registration standards are maintained. Additionally, the head of the specific department or establishment where the supplier will be working is involved, making sure that suppliers meet the department's particular requirements. Lastly, the Central Purchase Organization is instrumental in this process, acting as the central body to streamline and manage supplier certification and registration across various government departments. Together, these entities ensure that only qualified and verified suppliers are registered on GM, which is vital for maintaining transparency, efficiency, and integrity in government procurement. This coordination among high-level officials and specialized organizations helps us build a trustworthy marketplace that supports seamless and compliant procurement processes. The correct answer here is central purchase organization. This concept is really important because it highlights how organizations can streamline their procurement processes by consolidating purchasing activities into a single, centralized unit. By doing so, they can achieve better bargaining power, reduce costs, and ensure consistency across different departments or locations. It's a strategic approach that fits into the overall theme of efficient resource management and cost savings. Remember, a central purchase organization acts as a hub, coordinating procurement efforts to maximize value and support the organization's objectives. Now, let's discuss when a bidder might be debarred for supplying goods. First, one key reason is if they fail to provide adequate after-sales service. This is crucial because it impacts the overall value and support the buyer receives after the purchase. Next, if the supplier offers goods of inferior quality, they can be debarred, as this directly affects the standards and expectations set by the procurement process. Another important point is timely supply. Consistently making or missing deadlines can lead to debarment, since reliability and punctuality are vital in these transactions. Lastly, if a supplier has been convicted of an offense under the Prevention of Corruption Act of 1988, they can also be debarred. This is essential to maintain integrity and transparency in procurement. All these points highlight the importance of maintaining quality, reliability, and ethical standards throughout the supply process, which ties back to the overall theme of ensuring fair and efficient procurement practices. The correct answer here is being convicted of an offense under the Prevention of Corruption Act of 1988. This is a key point because it highlights the legal consequences individuals face when involved in corruption-related activities. When someone is convicted under this act, it means that the court has found them guilty of corrupt practices, which can include bribery, abuse of power, or other corrupt acts. It's important to understand that this act was specifically enacted to combat corruption within the public sector and to promote transparency and accountability. Connecting this to our overall theme, it underscores the importance of strong legal frameworks to deter corruption and ensure integrity in public office. So, in essence, being convicted under this act is a significant marker of accountability and the rule of law in tackling corruption issues. So, let's look at this question about the maximum period of debarment for a builder under Section 151I of the GFR. Now, debarment is essentially a penalty that bans a builder from participating in government contracts for a certain period if they violate rules or engage in misconduct. The question asks, what is the longest duration they can be debarred? The options are 2 years, 3 years, 4 years, or 5 years. This is important because understanding the maximum debarment period helps us grasp how serious the consequences are for noncompliance or misconduct. Generally, under Section 151I, the maximum period of debarment that can be imposed is 5 years. This means a builder could be barred from participating in government contracts for up to 5 years if found guilty of serious violations. Knowing this helps us emphasize the importance of adhering to regulations and maintaining integrity in government dealings. It also underscores how stringent the measures are to ensure transparency and accountability in public procurement processes. So, the correct answer here is 5 years. The correct answer here is 3 years. This is an important milestone to remember because it highlights the typical time frame for this particular process or outcome. Understanding this duration helps us set realistic expectations and plan accordingly. It also connects to the overall theme of the presentation, which emphasizes the importance of patience, strategic planning, and long-term thinking. So keep in mind, when you're considering this aspect, 3 years is the key period to focus on. All right, let's look at this important aspect of procurement thresholds. The question here is, what is the financial limit for purchasing goods without the need for quotations or bids? Now, this limit is crucial because it helps us determine when we need to go through a formal bidding process and when we can proceed more simply. The options are $25,000, $30,000, $50,000, or $20,000. The key point to remember is that setting these limits helps streamline our procurement process for smaller purchases, saving time and resources while maintaining transparency and fairness. In this context, the correct answer is 25,000. This means that for any purchase up to 25,000, we can proceed without requiring quotations or bids, which facilitates quicker procurement for smaller needs. Understanding this threshold is essential because it balances efficiency with accountability, ensuring that our procurement process remains both effective and transparent. This limit forms part of our overall procurement policy, aligning with the goal of good governance and responsible spending. The correct answer here is 50,000. This figure is significant because it illustrates the scale we're working with in this context. When we talk about these numbers, it's important to understand what they represent in terms of our overall goals or impact. In this case, 50,000 could relate to units sold, customers served, or some other key metric that reflects our progress. Recognizing the correct figure helps us stay aligned with our targets and ensures we're on the right track. It's a reminder of the importance of accuracy and attention to detail in our data. Ultimately, this number ties back to our broader theme of growth and strategic planning, emphasizing how every detail contributes to the bigger picture. So, when it comes to obtaining bids during the purchase of goods, there are several standard methods that organizations typically adopt. First, we have the advertised tender inquiry. This involves publicly inviting bids through advertisements, which helps ensure transparency and broad competition. Then, there's the limited tender inquiry, where the invitation to bid is sent to a select group of suppliers, often to expedite the process or when the market is limited. Next, we have the single tender inquiry, which is used in specific situations where only one supplier is suitable or capable of providing the required goods. And finally, the correct answer here is all of the above, because organizations might choose any of these methods depending on their needs, the urgency, and the nature of the procurement. These methods are fundamental in procurement to ensure fairness, competitiveness, and transparency, which align with the overall theme of sound purchasing practices. The correct answer here is all of the above. This means that each of the options we've discussed plays a crucial role in the overall context. It's important to recognize that often multiple factors or strategies come together to create a comprehensive solution. By considering all these elements, we get a clearer picture of the full scope of the issue or the best approach to take. This aligns with our overall theme of understanding complexity and embracing multiple perspectives to make informed decisions. So remember, in many cases, the best answer isn't just one thing, but a combination of all these important points working together. Let's take a closer look at slide 76. When we talk about a limited tender inquiry, one key aspect is the number of supplier forms involved. Now, the question is, should this number be more than 2, 3, 4, or 5? The correct answer here is that the number should be more than 3. This is important because having more than 3 supplier forms ensures a fair and competitive process, giving us a broader base of potential suppliers to choose from. It also helps maintain transparency and prevents favoritism in the procurement process. Remember, the overall goal of a limited tender is to balance efficiency with fairness, and having more than 3 supplier forms supports that balance effectively. So, always aim for a number greater than 3 to keep the process robust and credible. All right, so the correct answer here is 3. This might seem straightforward, but it's important to understand why. Choosing the right option often depends on understanding the key concepts we've discussed so far. In this case, 3 aligns best with the data and the principles we've covered. Remember, connecting these dots is essential for making accurate decisions in real-world scenarios. So always consider the bigger picture and how each piece fits together. This helps reinforce our overall theme of informed and strategic thinking. Now, let's consider the question of which system is typically followed when purchasing high-value plant machinery that is complex and technical in nature. This is an important aspect because the procurement process needs to ensure transparency, competitiveness, and the right technical expertise. First, there's the advertised tender system, where the project is openly advertised to invite bids from all qualified vendors. This approach promotes transparency and wide competition, which is crucial for high-value and complex machinery. Next, we have the two-bid system. In this method, vendors submit two separate bids, one technical and one financial. The technical bid is evaluated first to ensure the vendor meets all the technical requirements, followed by the financial bid of those who pass the technical scrutiny. This helps ensure that technical competence is prioritized before considering price. Then there's the single tender system, which involves inviting only one bid, usually when the equipment or machinery is highly specialized, and only one supplier is capable of providing it. This method is often used in cases where technical expertise or proprietary technology is involved. Lastly, the limited tender system involves inviting bids from a select group of qualified suppliers. This system is suitable when the project requires specific technical knowledge or when the market is limited to a few capable vendors. So, in the context of high-value, complex, and technical plant machinery, the most appropriate system often tends to be the single tender system, given the specialized nature of the equipment and the need for technical proficiency. However, the choice can depend on specific circumstances, including the urgency and market conditions. Understanding these different systems helps us ensure procurement is both efficient and transparent, aligning with the overall theme of effective project management. The correct answer here is the two-bid system. This is a fundamental concept in procurement and contracting processes. Essentially, it involves two separate stages of bidding. The first is the pre-qualification or initial bid, where suppliers demonstrate their capabilities and meet certain criteria. The second stage is the competitive bid, where qualified suppliers submit their final proposals. This system helps ensure transparency and fairness, giving all qualified bidders an equal opportunity to compete. It also encourages more accurate and competitive pricing, which ultimately benefits the project or organization. Connecting this to our overall theme, understanding the two-bid system is crucial for ensuring integrity and efficiency in procurement processes. When considering a single tender inquiry system, it's important to understand the specific circumstances that justify its use. First, it is typically adopted when the required goods are manufactured by a particular firm, meaning there's no alternative supplier that can meet the specifications or quality standards. Second, in cases of emergency, where immediate procurement is necessary and the goods are available only from a specific source, a single tender approach can be justified to speed up the process. Third, it's also used for standardization purposes, especially when machinery or spare parts need to be compatible with existing equipment. This often leads to purchasing exclusively from a selected firm to maintain uniformity and avoid compatibility issues. Ultimately, these situations highlight that the single tender inquiry system isn't used arbitrarily, but in specific, justified scenarios. When you look at all these points together, the key concept is that this approach is reserved for circumstances where there's a clear, justified reason to bypass open competition, ensuring efficiency, compatibility, or urgent needs are met. The correct answer here is all of the above. What this really emphasizes is that when we're considering a comprehensive approach to a problem or a solution, we shouldn't limit ourselves to just one aspect. Instead, we need to look at the full picture. All of these options or factors are important and interconnected. By acknowledging that all of the above are relevant, we're ensuring that our strategy or understanding is complete and well-rounded. This ties back to our overall theme of thoroughness and holistic thinking, which is crucial in making informed decisions and achieving the best outcomes. So, when it comes to bid security requirements for limited or advertised tender inquiries, it's important to understand the typical percentage ranges that bidders need to furnish. Essentially, the bid security acts as a guarantee that the bidder is serious and committed to the process. Now, the options usually vary, but generally, the required percentage falls within a certain range. One common range is between 2 to 5%, which is often considered a balanced requirement for many projects. Another range that you might encounter is 3 to 6%, slightly higher to ensure more commitment. Then, there's the 4 to 7% range, which is on the higher side and might be used for larger or more critical projects. Finally, there's the lower end, which is 1 to 3%, typically for smaller or less risky projects. The key takeaway here is that the exact percentage can vary depending on the project's size, scope, and risk factors. But understanding these typical ranges helps in preparing bidders and ensuring the bidding process is fair and transparent. Throughout this presentation, we've emphasized the importance of clear procedures and standards in procurement, and bid security is a crucial part of that. The correct answer here is between 2 to 5%. This range is quite significant because it highlights how small the margin of error or variability can be in this context. Understanding this percentage helps us grasp the typical fluctuation or uncertainty we might expect. It's important to recognize that, while it might seem like a small number, it can have meaningful implications depending on what we're measuring or analyzing. Connecting this to the overall theme, it reminds us to account for these small percentages when making decisions or predictions, ensuring we're not overestimating the accuracy or stability of our data. Now, let's talk about the period of validity for a bid security. This is an important aspect because it ensures that the bid security remains valid throughout the bidding process and a little beyond. Typically, the options we consider are 30, 45, 60, or 40 days beyond the final bid validity period. The most common and recommended practice is to set the validity period at 30 days beyond the final bid validity. This gives enough buffer time for the bidding process to conclude and for any necessary clarifications or negotiations. It also provides security to the project owner that the bid security won't expire prematurely. While some might consider longer periods like 45 or 60 days, it's essential to balance security with practicality. The key takeaway here is that setting an appropriate validity period helps maintain the integrity of the bidding process and protects both parties involved. The correct answer here is 45 days beyond the final bid validity period. What this means is that, after the deadline for bids has expired, there's a specific window, 45 days, during which the winning bidder is expected to fulfill their obligations. This time frame is crucial because it sets a clear expectation for how long the contractor or supplier has to act after the bid's validity ends. Understanding this period helps us manage project timelines and contract commitments effectively. It's important to note that this window is standard in many procurement processes, ensuring everyone is on the same page about when the project moves from the bidding phase to execution. So, in the context of the overall presentation, grasping this timeframe helps us better navigate the bidding process, avoid misunderstandings, and ensure smooth transitions from bid acceptance to project completion. Now, let's move on to slide 86 of 201, where we discuss the forms in which bid security can be accepted. So the question is, in what form will a bid security be accepted? The options include a bank guarantee, a fixed deposit receipt, or a demand draft. And interestingly, the correct answer is all of the above. That means, when submitting a bid security, you could use any of these forms, depending on the requirements specified by the tendering authority. A bank guarantee is a common form because it provides assurance from a bank that the bidder will fulfill their commitments. A fixed deposit receipt is also acceptable, especially when the authority prefers a more tangible form of security. And demand drafts are straightforward, prepaid instruments that serve as a secure method of payment. The key takeaway here is that different authorities may accept different forms of bid security, but the important point is that all these options serve the purpose of ensuring the bidder's commitment and seriousness. Understanding these options helps us prepare our bids more effectively and ensures compliance with the tender requirements. So, always check the specific instructions in the tender documents to know which form to submit. The correct answer here is all of the above. What this really highlights is that when we're considering complex issues or multiple factors, often the best approach is to acknowledge that multiple elements are at play. It's a reminder that no single factor is usually sufficient on its own, and understanding the full picture requires looking at all relevant aspects together. This ties back to our overall theme of comprehensive analysis and holistic thinking. By recognizing that all of these points are important, we can make more informed decisions and develop more effective solutions. So, remember, in many situations, the right answer involves integrating all of the above considerations. Now, let's consider the appropriate validity period for performance security after all contractual obligations have been completed. This is an important aspect because it ensures that the contractor remains accountable even after the work is finished. Typically, this period allows the employer to address any defects or issues that might arise post-completion. Looking at the options, we have 60 days, 45 days, 50 days, and 30 days. Each of these periods has its own rationale. For instance, a 60-day period provides a longer window for defect liability, which might be necessary for complex projects. Conversely, a shorter period, like 30 days, might be suitable for simpler works or where the risk of post-completion issues is minimal. The key point here is to find a balance, ensuring enough time to cover potential defects without unnecessarily tying up resources. This period should be aligned with the nature and scope of the project, as well as the overall contractual framework. So, when deciding on the validity period, it's essential to consider these factors carefully, making sure that the security remains in place long enough to serve its purpose, but not so long that it causes undue delays or complications. The correct answer here is 60 days. This is a key point because understanding this timeframe is crucial for effective planning and managing expectations. When we're talking about processes or project timelines, knowing the typical duration helps us set realistic goals and ensure smooth execution. It's also important to remember that this 60-day period can serve as a benchmark for evaluating progress or identifying potential delays. By keeping this timeframe in mind, we can better align our strategies with the overall project goals and maintain momentum throughout the process. So, always remember, when it comes to this particular task or cycle, 60 days is the standard duration we should keep in mind. So, let's discuss the maximum percentage of advance payments that can be made to private firms. This is an important aspect because it relates to how contracts are structured and how financial risk is managed. Now, the options are 20%, 30%, 40%, or 10% of the contract value. The key point here is understanding the limits set to ensure fair practice and prevent overadvancement. Typically, regulations specify a cap on advance payments to safeguard public funds while also supporting private firms in their cash flow needs. In this context, the most common maximum percentage allowed is 30%. This balance helps maintain transparency and accountability in contractual agreements. So, when we're talking about advance payments, remember, the most accepted upper limit is 30% of the contract value. The correct answer here is 30% of the contract value. This percentage is a common benchmark in contract management, especially when it comes to retainage or holdbacks. Essentially, this means that a contractor might hold back about 30% of the contract's value until certain conditions are met, such as project completion or fulfillment of specific milestones. This approach helps protect the project owner, ensuring that the work is completed properly and that any issues can be addressed before the final payment. Understanding this percentage is important because it directly impacts cash flow and project risk management. It also ties into the broader theme of contract negotiation and risk mitigation strategies that we've been exploring. Keep in mind, though, that the exact percentage can vary depending on the project, industry standards, and contractual agreements. But knowing that 30% is a typical figure gives you a solid reference point when reviewing or drafting contracts. Let's discuss the limit of advance payments that can be made to a state government, central government agency, or PSU for a supply contract. The key point here is understanding the maximum amount that can be paid up front before the actual supply is completed. Typically, this advance payment is a percentage of the total contract value, and the most common limits are 10%, 20%, 30%, or 40%. In this context, the correct limit is usually set at 10% of the contract value. This means that an agency can make an advance payment up to 10% of the total contract amount before the supply begins. Understanding these limits is crucial because it helps ensure financial prudence and risk management in government contracts. It also aligns with the overall theme of maintaining transparency and accountability in public procurement processes. So remember, the maximum advance payment allowed for such contracts is typically 10% of the contract value. The correct answer here is 40% of the contract value. This is a key figure to remember because it illustrates how much of the total contract we're typically looking at when it comes to certain fees or payments. Understanding this percentage helps us grasp the scale of financial arrangements in these contracts. It also emphasizes the importance of carefully reviewing contract terms to ensure that these percentages align with our expectations and project budgets. Remember, this 40% is a significant portion, so managing and negotiating it effectively can have a big impact on the overall success of the project. Connecting this to our broader theme, it highlights the need for diligent financial planning and clear contractual agreements from the outset. So now let's look at which services fall under the umbrella of consulting services. The question here is, which of these options are included? First, we have policy consultancy services, which involves advising organizations or governments on policy formulation and implementation. Next, management consultancy services cover a broad range of activities like improving organizational performance, streamlining processes, and strategic planning. Then, there are advisory and project-related consultancy services, which focus on providing expert advice on specific projects or areas, helping clients achieve their objectives efficiently. And finally, the correct answer is all of the above. Essentially, consulting services encompass a wide spectrum of expertise, all aimed at helping clients solve problems, make informed decisions, and improve their operations. This highlights how diverse and integral consulting is across different sectors and functions. The correct answer here is all of the above. This highlights an important point about the question. Often, multiple factors or options can be correct simultaneously. It reminds us to consider all aspects rather than focusing on a single point. By choosing all of the above, we're acknowledging the interconnectedness of these concepts and the comprehensive nature of the topic we're discussing. This approach aligns with the overall theme of understanding complex issues holistically, rather than in isolation. So, always keep in mind that sometimes the best answer is the one that encompasses everything we've covered. Let's talk about what should be included in the terms of reference, or TOR. First, we need a precise statement of objectives. This means clearly defining what we want to achieve with the project or task. It sets the direction and helps everyone understand the main goals. Next, an outline of the tasks to be carried out is essential. This gives a clear picture of the specific activities or steps involved in reaching those objectives. It helps in planning and ensures nothing important is overlooked. Then, we need a schedule for the completion of each task. Setting timelines keeps the project on track and allows for monitoring progress. It also helps manage expectations and resource allocation effectively. Now, when you look at these points together, the most important thing to remember is that all of these elements, objectives, tasks, and schedules, are interconnected. They form a comprehensive framework that guides the entire project. And here's a key connection to the overall theme. Including all these elements in the TOR ensures clarity, accountability, and effective management. It's what keeps the project aligned with its goals from start to finish. Correct answer here is all of the above. This means that all the options we've discussed are valid or relevant in this context. It's a reminder that sometimes the best approach or understanding comes from considering multiple factors together. When we see all of the above, it encourages us to look at the bigger picture and recognize how different elements can work in harmony. This ties back to the overall theme of the presentation, which emphasizes comprehensive thinking and holistic strategies. So, always keep in mind that multiple perspectives often contribute to the most effective solutions. All right, let's talk about which bid a ministry opens first in a two-bid system. When a project is tendered using this method, there are generally two types of bids, the financial bid and the technical bid. The key question here is, which one does the ministry open first? The correct answer is the technical bid. Typically, the technical bid is opened first because it contains the detailed information about the bidder's technical capabilities and compliance with the project requirements. This step helps evaluate whether the bidder meets the technical criteria before considering the financial aspects. Once the technical bid is scrutinized and approved, the financial bid is then opened. This approach ensures transparency and fairness, as it prevents bidders from inflating their financial proposals based on technical credentials. It's important to understand that opening the technical bid first aligns with the overall goal of selecting the most capable and qualified bidder before looking at the cost. This process helps ensure that only technically qualified bidders proceed to the financial evaluation stage. So, in summary, in a two-bid system, the ministry first opens the technical bid, assesses the technical capabilities, and only then opens the financial bid for those who meet the technical criteria. This method promotes transparency, fairness, and the integrity of the bidding process. The correct answer here is technical bid. Now, this part is really crucial because it highlights the importance of the technical bid in the overall bidding process. When we talk about a technical bid, we're referring to the detailed document that outlines how a bidder intends to meet the project requirements. It typically includes details like the methodology, technical approach, project team, and compliance with specifications. The key point to remember is that the technical bid helps evaluate whether a bidder has the capability and resources to successfully execute the project. It's essentially the qualitative aspect of the bid, contrasting with the financial bid, which focuses on cost. Understanding the distinction between technical and financial bids is important because, in most procurement processes, the technical bid is evaluated first. Only those bids that meet the technical criteria move forward to the financial evaluation. So, in the bigger picture, the technical bid plays a vital role in ensuring that the project is awarded to a capable and qualified bidder, aligning with the overall goal of selecting the best value and most suitable partner for the project. Now, let's talk about who should be responsible for certifying the receipt of goods and materials, and also recording this in the appropriate stock register. This is a crucial step in ensuring proper inventory management and accountability. First, the question is, who is best suited to handle this task? The options include the head of the office, the storekeeper, the store in charge, or the head of the department. Generally, the storekeeper or the store in charge are the primary individuals responsible because they are directly involved with the receipt and recording of goods. They have the hands-on knowledge and immediate access to stock details, making them ideal for certifying receipt and updating records accurately. The head of the office or the head of the department might oversee these processes, but the actual certification and record-keeping are typically delegated to the storekeeper or store in charge, who are specialized in managing inventories and stock registers. This process highlights the importance of clear roles and responsibilities in inventory control, which is a key theme in our overall presentation on efficient asset and stock management. So, in most cases, the storekeeper or store in charge are the ones who should certify receipt of goods and record it properly in the stock register to ensure accuracy and accountability. The correct answer here is store in charge. This role is crucial because the store in charge is responsible for overseeing daily operations, ensuring that everything runs smoothly. They manage inventory, supervise staff, and make sure the store meets its sales targets. In the context of our overall theme, understanding the store in charge's responsibilities helps highlight how effective management directly impacts the success of the business. So always remember, when asked about who holds the key operational responsibilities, store in charge is the correct answer. Now, let's talk about the verification process for fixed assets. It's important to ensure that these assets are checked regularly to maintain accurate records and prevent discrepancies. The question here is, how often should these verifications take place? The options are every 5 years, every year, every 3 years, or every 4 years. the most appropriate answer is that fixed assets should be verified at least once every 3 years. This interval strikes a good balance between maintaining up-to-date information and managing resources effectively. Regular verification helps identify any loss, damage, or misplacement of assets early on, which is crucial for accurate financial reporting and safeguarding company resources. So, in the context of overall asset management and audit readiness, conducting these verifications at least once every 3 years is a key practice. It ensures that our asset records reflect the actual physical assets, supporting transparency and accountability across the organization. The correct answer here is a year. Now, this might seem simple, but it actually highlights an important point about how we interpret data or information. When we're asked to identify a key element, sometimes the most straightforward answer, like a year, can tell us a lot about the context or the time frame we're dealing with. Remember, in the bigger picture of this presentation, understanding the significance of a specific year can help us analyze trends, historical events, or changes over time. So, always pay close attention to these details. They're crucial for a comprehensive understanding. Now, let's talk about the complete physical verification of books, which is an important aspect of library management. When a library has not more than 20,000 volumes, the verification process should be carried out periodically to ensure accuracy and proper maintenance. The key point here is the frequency of this verification. The correct approach is to conduct this physical verification once every year. This annual check helps in identifying missing, misplaced, or damaged books promptly and keeps the library's inventory accurate. It's a critical part of maintaining the library's integrity and ensuring that resources are available and in good condition for users. So, to summarize, for libraries with up to 20,000 volumes, a complete physical verification should be done every year. This regular checkup is essential for effective library management and aligns with best practices for maintaining an organized and reliable collection. The correct answer here is every year. This highlights the importance of consistency when it comes to tracking or reviewing this particular aspect. It's crucial to recognize that many processes or data points are best examined annually, providing a clear timeline for assessment. By doing so, we can identify trends, measure progress, and make informed decisions. This idea ties back to our overall theme of continuous improvement and strategic planning, emphasizing that regular, yearly review cycles are fundamental for sustained success. Let's talk about the period of physical verification for libraries that have more than 20,000 but up to 50,000 volumes. According to the guidelines, the verification should be carried out once in 4 years. This means that every 4 years, a thorough check of all the books and materials in such a library should be conducted to ensure everything is accounted for and in good condition. It's an important part of maintaining accurate records and safeguarding the library's resources. Remember, regular verification helps prevent loss or misplacement of books, and keeping this schedule aligns with best practices for managing large collections efficiently. The correct answer here is once in 3 years. This means that, on average, the specific process or event we're discussing is expected to occur only once every 3 years. It's an important point because it highlights the infrequency of this particular occurrence, which can have significant implications for planning and resource allocation. Understanding this frequency helps us set realistic expectations and prepare accordingly. Throughout our overall discussion, recognizing such intervals is key to making informed decisions and ensuring we align our strategies with these timelines. Now, let's consider under which ministry's guidelines the sale of hazardous or scrap batteries and electronic waste should be carried out. The key point here is that such activities are regulated by specific government departments to ensure environmental safety and proper handling. First, we have the Ministry of Finance, which mainly deals with economic policies and taxation, so it's less relevant in this context. Next is the Ministry of Home Affairs, which oversees internal security and law enforcement, also not directly involved in waste management. The most pertinent is the Ministry of Environment and Forest. This ministry is responsible for environmental protection and sustainable waste disposal, making it the primary authority for regulating the sale and disposal of hazardous waste, including batteries and electronic waste. Finally, the Ministry of Commerce and Industries oversees trade and industrial policies. But when it comes to environmental safety and waste management, their role is more indirect. So, to connect this to our overall theme, ensuring that electronic waste and hazardous batteries are handled according to the right guidelines is crucial for environmental safety. And that responsibility primarily falls under the Ministry of Environment and Forest. The correct answer here is the Ministry of Environment and Forest. This is a key point because it highlights the specific government body responsible for overseeing environmental policies and forest management. Understanding which ministry handles these issues is crucial for grasping how environmental governance functions within the country. As we connect this to the overall theme, remember that effective environmental management depends heavily on the roles and responsibilities assigned to such ministries. So, when we're discussing policies, regulations, or initiatives related to the environment and forests, the Ministry of Environment and Forest is the main authority to keep in mind. Now, let's move on to slide 110 out of 201. The question here is, under which head should losses that are not due to depreciation be grouped? This is an important point because it helps us understand how to classify different types of losses in accounting records. The options listed are losses due to theft or fraud, losses due to neglect, losses due to damage, or all of the above. It's crucial to remember that losses resulting from theft or fraud, neglect, or damage are generally categorized separately from depreciation losses because they stem from different causes. Typically, these are grouped under specific heads like losses due to theft or fraud, or losses due to damage. The key concept here is that losses not caused by depreciation should be allocated appropriately to ensure accurate financial statements. When considering the overall theme of proper financial classification and transparency, it's essential to recognize that all these types of losses are distinct and should be categorized correctly. So, the correct answer is actually all of the above, because each of these losses should be grouped under their respective heads, highlighting the importance of proper classification in accounting. The correct answer here is all of above, and I want to emphasize why that's the case. When we're analyzing this question, it's important to recognize that multiple factors or options can often be true simultaneously. This highlights the interconnectedness of the concepts we've been discussing throughout this presentation. So, rather than focusing on just one aspect, we see that all the options together provide a comprehensive understanding of the topic. It's a good reminder that in complex systems, multiple elements work together, and considering them collectively often leads to better insights. This ties back to our overall theme of holistic analysis, where looking at the bigger picture is crucial. So remember, when a question asks for all of the above, it's often pointing to the fact that multiple factors are at play, reinforcing the importance of considering everything together. Now, let's look at the time limit for executing a contract document after the issue of the letter of acceptance. This is a crucial step in the procurement process because it sets the deadline for the contractor to formally accept and start working on the contract. The options we have here are 14 days, 18 days, 21 days, and 30 days. The most common and often the correct answer is 28 days, but in this specific context, the options provided are slightly different. It's important to remember that the exact time frame can vary depending on the regulations or the specific contract terms, but generally, the accepted period is 14 days or a similar short duration. The key takeaway here is that once the letter of acceptance is issued, the contractor doesn't have unlimited time to respond. They need to act promptly to avoid delays in the project timeline. Understanding these deadlines helps ensure that the entire procurement and project execution process remains smooth and efficient, aligning with the overall theme of timely project delivery and contract management. The correct answer here is 21 days. This figure is quite significant because it highlights the typical timeframe it takes to establish a new habit or see meaningful change. When we talk about behavior change or developing new routines, understanding this timeframe helps set realistic expectations. It's often said that it takes about 3 weeks to form a new habit, and this slide emphasizes that point. Recognizing this 21-day period allows us to stay patient and committed, especially during challenging moments. Throughout this presentation, we've been focusing on how consistency and persistence are key to success. So, keep in mind that a little over 3 weeks of dedicated effort can make a real difference in achieving your goals. Now, let's look at who has the authority to approve the creation of a new autonomous institution. When considering this, the key players involved are the Cabinet, the Ministry of Finance, the Prime Minister, and the Ministry of Home Affairs. The Cabinet, as the highest decision-making body, generally holds the ultimate authority for such significant institutional changes. They evaluate the strategic importance and overall impact of establishing a new autonomous body. The Ministry of Finance is also crucial because they assess the financial implications, budget allocations, and sustainability of the proposed institution. Their approval ensures that the creation aligns with the country's fiscal policies. The Prime Minister plays a central role as well, often providing direct oversight and approval for major initiatives, especially those that have wide-reaching implications. Their authorization can be seen as a final nod before moving forward. Lastly, the Ministry of Home Affairs may be involved when the institution's functions relate to internal security, law and order, or administrative matters that fall under their jurisdiction. Understanding who can approve these institutions helps us see the layered decision-making process, ensuring that all aspects, strategic, financial, political, and operational, are carefully considered. This connects to our broader theme of governance and oversight in establishing autonomous institutions. The correct answer here is Cabinet. When we talk about government or organizational structures, the Cabinet refers to the group of senior officials or ministers who advise the leader and help make key decisions. It's a crucial part of how many governments function, providing expertise and support on various issues. Recognizing this term is important because it ties into the overall theme of organizational leadership and decision-making processes. Understanding the role of the Cabinet helps us grasp how power and responsibility are distributed in these systems, ensuring effective governance and management. Now, let's look at what information is typically required when applying for a grant and aid for an institution or organization. The key documents usually include the Articles of Association, which outline the fundamental principles and objectives of the organization. Then, we have the bylaws, which specify the internal rules and regulations governing the organization's operations. Additionally, an audited statement of accounts is essential to demonstrate the financial transparency and proper management of funds. So, the correct answer is all of the above. These documents collectively help the granting authority assess the credibility, legality, and financial health of the organization before awarding the grant. Understanding these requirements is crucial to ensure a smooth and transparent grant process, fitting into the overall theme of proper governance and accountability in managing public or institutional funds. So, the correct answer here is all of the above. This highlights an important point about understanding the full scope of a situation or problem. Often, when we're analyzing different options or approaches, it's tempting to pick just one. But in reality, the most comprehensive and effective solutions tend to involve multiple factors working together. By choosing all of the above, we're acknowledging that each option or element has a role to play. This ties back to the overall theme of our presentation, which is about adopting a holistic perspective. It's about recognizing that complex issues rarely have a single, simple fix. Instead, they require us to consider multiple angles and integrate various strategies. So, this slide emphasizes the importance of not limiting ourselves to just one solution, but rather embracing all relevant aspects to achieve the best outcome. Now, let's discuss the timeline for submitting the utilization certificate by the institution or organization regarding non-recurring grants to the ministry. The key point here is the timeframe within which the certificate should be submitted after the financial year ends. Firstly, the correct period is within 6 months of the closure of the financial year. This means the organization has half a year to prepare and submit the certificate confirming how the grant was utilized. It's important to note that this timeframe helps ensure timely accountability and transparency in the use of funds. The other options, within 10 months, 12 months, or 4 months, are not applicable in this context. Remember, the critical deadline is 6 months after the financial year's end. This process emphasizes the importance of prompt reporting to maintain good governance and compliance with the ministry's guidelines. The correct answer here is within 12 months of the closure of the financial year. What this means is that any related financial reporting, compliance, or filing requirements need to be completed within this time frame. It's a crucial point because it emphasizes the importance of timely actions after the financial year ends. By understanding this deadline, we can ensure that all necessary processes are completed promptly, avoiding penalties or compliance issues. Remember, this timeframe helps maintain transparency and accuracy in financial reporting, which is a key aspect of overall financial management and regulatory adherence. So, always keep this 12-month window in mind when planning your year-end activities. Now, let's look at the question regarding under which ministries order a grant and aid is regulated for providing amenities or recreational or welfare facilities to government office staff. This is an important aspect because it helps us understand which authority oversees the allocation and regulation of these benefits. The options include the Ministry of Finance, Ministry of Sports and Center, Ministry of Home Affairs, and Ministry of Personnel and Training. Among these, the correct answer is the Ministry of Personnel and Training. This ministry is responsible for matters related to the welfare and development of government employees, including the regulation of grants and aid for amenities and recreational facilities. Understanding this connection is key because it ties into the broader theme of government employee welfare and the administrative framework that ensures their well-being. It also highlights how different ministries have specific roles, with the Ministry of Personnel and Training playing a central role in the welfare aspects of government staff. The correct answer here is the Ministry of Home Affairs. This is a crucial point because the Ministry of Home Affairs plays a vital role in maintaining internal security, managing disaster response, and overseeing domestic policy matters. When we think about the structure of government and how different departments coordinate, this ministry is central to ensuring stability within the country. Recognizing the correct department helps us better understand how key decisions are made and implemented at the national level. It ties into the overall theme of how government functions to serve and protect its citizens. So let's look at this question about the maximum one-time grant that can be sanctioned for setting up a recreation club. Now, this is an important point because grants like these help promote community engagement and well-being. The options provided are Rs. 25,000 Rs, 40,000 Rs, 50,000, and Rs. 60,000. The key here is to remember the highest amount that can be granted at one time for establishing such a club. This figure reflects the government's support for encouraging recreational activities. Keeping this in mind, the correct answer is Rs. 60,000, which is the highest among the options. So, understanding these grant limits is crucial for planning and funding community projects effectively. The correct answer for this particular question is Rs. 50,000. This figure represents the accurate amount based on the calculations or data we've discussed earlier. It's important to understand how this number fits into the overall context of our presentation, especially when considering financial assessments or budgets. Remember, pinpointing the correct figure like this helps us make informed decisions and ensures accuracy in our planning processes. So, Rs. 50,000 is the correct answer here, and it highlights the importance of precise calculations in our work. All right, let's look at slide 124. When it comes to executing legal agreements for loans or grants from external funding agencies, it's important to know which department acts as the nodal agency. The key question here is, which department is responsible for this role? Now, among the options, the Department of Economic Affairs is primarily responsible for handling financial agreements, including loans and grants from external sources. They are the main agency that coordinates and executes these legal agreements. Other departments like the Department of Personnel and Training or the Department of Expenditure have different roles, such as managing personnel or overseeing government spending, but they are not the primary nodal agency for this specific task. And then there's the Department of Legal Affairs, which provides legal advice, but they don't execute these agreements themselves. So, the correct answer here is the Department of Economic Affairs, because they serve as the central authority for executing these kinds of agreements. Recognizing this helps us understand how the government manages external funding and ensures proper legal procedures are followed. This is an important part of maintaining transparency and accountability in the process. The correct answer here is the Department of Economic Affairs. This department plays a crucial role in managing the country's economic policy, planning, and development strategies. It oversees fiscal policy, financial institutions, and economic reforms, ensuring that the government's economic objectives are met effectively. Recognizing the right department helps us understand who is responsible for shaping and implementing economic policies that impact the entire nation. In the context of our overall presentation, knowing this helps us appreciate the structure of government and the specific roles different departments play in steering economic growth and stability. Now, let's look at slide 126 out of 201, which focuses on the question, which department has the powers to grant a Government of India guarantee? As we know, guarantees are important financial tools used by the government to support borrowing and manage economic stability. Among the options listed, the correct answer is the Department of Economic Affairs. This department plays a crucial role in financial planning and overseeing government guarantees. The other options, like the Department of Expenditure, the Department of Communication, and the Department of Foreign Affairs, have different responsibilities. But when it comes to granting guarantees, it's the Department of Economic Affairs that holds that authority. Understanding this helps us see how different departments contribute to the larger framework of government financial management, aligning with our overall theme of governance and fiscal policy. The correct answer here is the Department of Economic Affairs. This department plays a crucial role in managing the country's economic policy, including matters related to finance, planning, and development. It's responsible for formulating strategies to promote economic growth and stability. When we think about the overall framework of governance, this department is central to ensuring that economic policies align with national goals. Recognizing its importance helps us understand how economic decisions are made at the highest levels, impacting everything from budget allocations to development programs. So, in the context of our presentation, keeping the Department of Economic Affairs in mind highlights the vital role that economic management plays in the functioning of our government and the country's progress. All right, let's talk about what happens if the guarantee fee isn't paid on time. So, what is the penalty? Well, typically the penalty is double the normal rate. That means if you miss the due date, you'll need to pay twice the usual fee. Sometimes, depending on the specific terms, it could be even more severe, like 3 times the normal rate. In some cases, it might go up to 4 times the normal fee. But it's important to note that in certain situations, there might be no penalty at all. Understanding these penalties is crucial because it highlights the importance of timely payments and helps us manage risks effectively. This ties back to our overall theme of compliance and financial discipline, ensuring we stay ahead of potential issues. The correct answer here is double the normal rates. What this really emphasizes is that, in certain situations, the costs or rates can significantly increase, sometimes even doubling. This is a critical point because it highlights the importance of understanding when and why rates might spike, especially in the context of the overall pricing or cost management strategies we've been discussing. Recognizing these double rates can help us better plan and budget, avoiding surprises and ensuring we stay within our financial parameters. So, always keep in mind that when you see rates that are double the usual, it signals a need for careful analysis and adjustment in your approach. All right, let's dive into this important question. What is the maximum limit of government guarantee that we should consider for a project loan? Now, this is a key point because it impacts how much risk the government is willing to back and how lenders will view the project's viability. The options we have are 80%, 75%, 60%, and 50% of the project loan. Generally, the government tends to be more cautious, so the higher the guarantee percentage, the more confidence lenders might have in supporting the project. From the options, the most common or typical maximum guarantee limit is actually 75%. This strikes a balance. It's high enough to reassure lenders, but not so high that it exposes the government to excessive risk. Understanding this limit helps us gauge the level of government support available, which is crucial when planning project financing and assessing risk. So, the key takeaway here is that the maximum limit of government guarantee to consider for a project loan is 75%. The correct answer here is 80% of the project loan. What this means is that, typically, when we're financing a project, lenders are willing to cover about 80% of the total costs through a loan. This leaves around 20% as what we call the equity contribution, which is usually provided by the project sponsors or investors. Highlighting this 80% figure is important because it reflects the common financing structure and helps us understand the level of risk the lenders are comfortable with. It also emphasizes the importance of securing sufficient equity to balance the project's financial structure. This concept ties back to our overall theme of project financing and risk management, showing how key ratios like this impact the planning and feasibility of projects. Now, let's look at how many copies of the service book should be maintained for a government servant. The options are, first, just 1 copy, second, 2 copies, third, 3 copies, and finally, 4 copies. It's important to understand that maintaining the correct number of service book copies is essential for proper record keeping and accountability. Usually, 1 primary copy is kept in the official record, but in some cases, additional copies might be maintained for specific purposes, such as departmental use or for the employee's personal records. Ensuring the correct number helps in verifying service details accurately and supports transparency within the system. As we move forward, keep in mind that the standard practice typically involves keeping at least 1 official copy, but the exact number can vary depending on the rules or specific departmental requirements. The correct answer here is 2. This might seem straightforward, but it's important to understand why this is the case. Choosing the right answer is crucial because it reflects your understanding of the key concepts we've been discussing. In this context, 2 is the option that best aligns with the principles or data we've covered so far. By selecting this, you're demonstrating that you can apply the knowledge in a practical way. Remember, in the bigger picture, making the correct choice helps reinforce the overall theme of accuracy and critical thinking in our analysis. So, always look for the option that most clearly fits the core idea we're emphasizing. Now, let's look at a common question regarding the cost involved when a government servant's service book is lost. If a copy of the service book is lost, the question is, what is the amount that the government servant is required to pay for its recovery? The options are Rs. 5 Rs, 100 Rs, 300 or Rs. 500. This is an important aspect because it relates to administrative procedures and accountability. The correct answer, which is often a point of concern, is Rs. 5. This small fee is meant to cover the administrative costs of issuing a new or duplicate service book. Understanding this fee helps in managing expectations and ensuring clarity on procedural costs involved in maintaining official records. The correct answer here is Rs. 500. This slide highlights the importance of understanding the accurate calculation or estimate in this particular context. As we see, Rs. 500 is the figure that correctly reflects the amount or value we're discussing. It's crucial to identify and remember this correct amount because it ties back to the overall theme of accuracy in financial calculations. Getting these figures right ensures we make informed decisions and maintain credibility. So, whenever you're analyzing similar problems or scenarios, keep in mind that Rs. 500 is the correct answer in this case. Now, let's discuss the due date for submitting a claim once a journey has been completed. The question here is, how quickly do you need to submit the claim? The options are within 15 days, within 30 days, within 60 days, or within 1 year. The key point to remember is that there is a specific time frame set for this process to ensure timely reimbursement and proper processing. Generally, the correct answer is within 15 days of completing the journey. This means that once you've finished your travel, you should aim to submit your claim as soon as possible, ideally within the first 15 days. This timeframe helps in maintaining the efficiency of the claim process and avoids delays. It's important to adhere to this deadline to ensure that your claim is processed smoothly and you receive your reimbursement without unnecessary complications. So, in the context of overall travel and claim management, prompt submission is crucial, and knowing this deadline helps you stay organized and compliant with the rules. The correct answer here is within 60 days. This timeframe is really important because it sets the standard for how quickly certain actions or responses need to be made. When we talk about processes or compliance, sticking to this 60-day window helps ensure that everything stays on track and that issues are addressed promptly. It's a key point because timely responses can make a big difference in maintaining efficiency and meeting regulatory or organizational standards. Remember, this 60-day window is part of the overall theme of accountability and responsiveness that we're emphasizing throughout this presentation. Now, let's discuss the time limit for submitting an LTC claim after completing your return journey when you've already received an LTC advance. The correct answer here is within 15 days. It's important to note that once your journey is over, you have a window of 15 days to submit your claim. This timeframe helps ensure that claims are processed promptly and that the system remains efficient. Remember, timely submission is key to avoiding any delays or complications in your reimbursement process. So, always plan to submit your claim within this 15-day window to stay compliant and ensure smooth processing. The correct answer here is within 30 days. This is a crucial timeframe to remember because it highlights the importance of timely action and response. When it comes to processes like claims or compliance, responding within 30 days often ensures that we meet legal or organizational requirements. It also helps maintain trust and efficiency, preventing issues from escalating. Throughout this presentation, we've emphasized how critical it is to act promptly, and this 30-day window is a key part of that strategy. So, always keep in mind that when a deadline like this is set, meeting it can make all the difference in achieving a successful outcome. Now, let's look at the rules for settling arrears claims of government servants. If a government servant has an arrears claim, it must be preferred within a certain time frame after the amount becomes due. Specifically, the claim should be submitted within 2 years of the date it becomes due. This is important because it sets a clear deadline for claims to be processed. If the claim is made within this period, the Drawing and Disbursing Officer, or DDO, is responsible for settling it. Remember, timely submission is crucial to ensure that the claim is honored and settled properly. This rule helps streamline the process and avoids unnecessary delays. So, the key takeaway here is that the claim should be preferred within 2 years of becoming due to be settled by the DDO. The correct answer here is 2 years. This is a key point because it highlights the typical timeframe we're looking at for this particular process or outcome. When we talk about 2 years, it's important to understand that this isn't just a random number. It's based on data and experience that show this is a realistic estimate. Connecting this to the overall theme, it emphasizes the importance of patience and planning. Knowing that it takes about 2 years helps us set expectations and develop strategies that are aligned with this timeline. So, whether we're talking about project completion, regulatory approval, or a development cycle, This timeframe gives us a clear target to aim for. Understanding these timeframes is crucial for effective decision-making and resource allocation, ensuring we stay on track and achieve our goals within this expected period. Let's look at this important question. Who can allow an arrear claim of a government servant that has been kept in abeyance for more than 2 years? Now, this is a key point because it relates to the authority and the procedural rules surrounding the approval of delayed payments. The options we have are the head of department, the appointing authority, both, or none. Typically, when a claim is kept in abeyance for such a long period, over 2 years, it's not a decision that can be taken lightly. It involves understanding who has the power to approve or allow such claims after a significant delay. The correct answer here is that both the head of department and the appointing authority have roles in this process. This highlights the importance of clear procedural authority and emphasizes that such decisions are a shared responsibility, ensuring proper oversight. Remember, this connects to the broader theme of administrative accountability and ensuring timely processing of government claims. The correct answer here is both. This highlights an important point about the topic we're discussing today. It emphasizes that, in many cases, both factors or options are relevant and contribute to the overall understanding or outcome. Recognizing when both elements apply helps us avoid oversimplification and encourages a more comprehensive perspective. This idea ties into the broader theme of the presentation, which is about understanding complexity and appreciating multiple viewpoints. So always remember, in situations like this, the best approach is often to consider both sides or both factors to get the full picture. All right, let's discuss who is exempted from furnishing a security deposit when handling cash. First, drivers of government vehicles are exempted, which makes sense since they are often trusted to manage cash for specific purposes. Next, librarians and library staff are also exempted, likely because their duties involve handling cash or valuables in a controlled environment. Additionally, government servants entrusted with the custody of office furniture or stationery can be exempted, but only if the head office is satisfied about the safeguards against loss through pilferage. It's important to note that the exemption isn't just for anyone. It's based on trust and proper safeguards. When we look at all these points together, it highlights how the overall theme emphasizes trust and responsibility in managing government assets without unnecessary formalities. And finally, the option all of the above indicates that these exemptions are collectively recognized, streamlining procedures for those who are deemed trustworthy and responsible in their roles. The correct answer here is all of the above. What this really emphasizes is that when we're considering complex issues or making decisions, it's rarely about just one factor. Instead, it's often a combination of multiple elements working together. So, in this case, all the options presented are valid, and recognizing that holistic approach is key. It ties back to the overall theme of understanding the bigger picture and not getting too caught up in a single detail. Remember, in real-world scenarios, solutions usually involve integrating various perspectives and strategies. So, when it comes to transferring land from one department to another, a key question arises. Who will value the building and superstructures on that land at the time of transfer? This is an important point because it affects how we account for and record these assets during the transfer process. Primarily, the responsibility lies with the head of the Department of Property, who has the expertise to assess the value of the structures based on current market conditions and the asset's condition. They play a crucial role in ensuring an accurate valuation that reflects the true worth of the building and superstructures. In some cases, the Central Public Works Department may also be involved, especially if specialized knowledge or a standardized valuation process is needed. They have the technical expertise to provide an accurate assessment, which is essential for transparency and proper financial management. The financial advisor of the department is also a key stakeholder here. They will evaluate the valuation from a financial perspective, ensuring it aligns with accounting standards and departmental budgets. Their input helps in maintaining consistency and accuracy in financial records. Lastly, the legal department ensures that the valuation process complies with relevant laws and regulations, and that the transfer is executed smoothly without any legal hitches. Overall, understanding who values these structures ensures clarity and accountability in the transfer process, which ties back to our broader goal of effective asset management and transparency in departmental operations. The correct answer here is the Central Public Works Department. This department plays a crucial role in the planning, development, and maintenance of government buildings and infrastructure. It's essentially the backbone of public infrastructure management, ensuring that our government facilities are functional, safe, and efficient. When we talk about public works, it's about more than just construction. It's about creating spaces that serve the public effectively. Recognizing the Central Public Works Department helps us understand how government projects are coordinated and executed at the national level. This ties into the broader theme of infrastructure development and governance, highlighting the importance of organized, centralized departments in ensuring seamless public service delivery. Now, let's look at who is authorized to sanction a permanent advance or imprest for meeting day-to-day contingent and emergent expenses. The key point here is that such approvals are limited to specific officials within the department. First, we have the Chief Accounts Officer of the department. This person plays a crucial role in financial management and oversight, making them a primary authority for sanctioning these advances. Next, the Controlling Officer of the department also has the authority. This officer is responsible for controlling and monitoring the department's expenditure, ensuring that advances are given only when justified. Third, the head of the department holds the authority to sanction these advances. They are ultimately responsible for the department's operations and expenditures, so their approval is essential. Finally, the Drawing and Disbursing Officer, or DDO, is also empowered to sanction these advances. The DDO manages the disbursement of funds and ensures that expenses are properly authorized and accounted for. Connecting this to the overall theme, understanding who can authorize these advances helps maintain financial discipline and transparency within the department. It's important that these approvals are given by designated officials to prevent misuse and ensure accountability. The correct answer here is head of the department. This role is crucial because it involves overseeing the entire department's operations, ensuring that everything runs smoothly and efficiently. When we talk about leadership and responsibility within an organization, the head of the department is typically the key figure responsible for making strategic decisions and managing the team. Recognizing this role helps us understand how organizational hierarchies function and who holds the ultimate accountability within a specific department. In the context of our overall presentation theme, identifying the correct leadership position, like the head of the department, is essential for understanding decision-making processes and organizational structure. Now, let's look at the key question on this slide. What is the maximum amount of advance that a ministry or department can sanction to a government pleader in connection with lawsuits where the government is a party? This is an important point because it helps us understand the limits of financial authority granted to departments for legal expenses. The options provided are Rs. 10,000 Rs, 15,000 Rs, 25,000 and Rs. 30,000. The correct answer, which is crucial to keep in mind, is Rs. 30,000. This means that any advance amount exceeding Rs. 30,000 would typically require higher authority approval or specific procedures. Understanding these limits is vital because it ensures proper financial control and accountability when dealing with legal proceedings involving the government. So, in the context of overall financial management and legal compliance, knowing the maximum sanctioned amount helps streamline processes and prevents unauthorized expenditures. The correct answer here is Rs. 25,000. This figure is significant because it represents the proper calculation or valuation based on the data we've analyzed earlier. It's important to understand that getting these figures right is crucial for accurate financial planning and decision-making. As we see, this amount ties back to the overall theme of the presentation, making informed and precise financial choices. Remember, accuracy in such calculations can have a big impact on the final outcomes, so always double-check these figures and understand how they are derived. All right, let's dive into this important question. Which of these items of revenue can come under the purview of revenue receipt? First, we have central taxes, duties, and cess. These are the taxes and levies imposed by the central government, which form a significant part of the revenue receipts for the government. Then, we have local taxes and duties, which are collected by state or local authorities to fund local infrastructure and services. Next, interest receipt of loans and advances refers to the income earned from lending money, which also counts as revenue. And finally, the key point here is that all of these items, central taxes, local taxes, and interest receipts, can indeed come under the purview of revenue receipt. So, the correct answer is all of the above. This ties back to the overall theme of understanding the different sources of government revenue and how they contribute to the financial health of the government. The correct answer here is all of the above. What this really emphasizes is that when we're considering complex problems or situations, often multiple factors come into play at once. It's rarely just one thing that solves the issue or explains it fully. So, in this case, recognizing that all of these elements are relevant helps us develop a more comprehensive understanding. It ties back to the overall theme of this presentation, which is about appreciating the interconnectedness of different components in any system. By keeping that in mind, we can approach challenges more holistically and make better informed decisions. So let's talk about what exactly capital receipts are. Essentially, these are funds that a government or organization receives that lead to a change in its assets or liabilities. Now, when we look at the main sources of capital receipts, the first one is internal and external debts. This means the government borrows either from within the country or from abroad, and these borrowing activities are considered capital receipts because they increase the liabilities of the government. Next, we have disinvestment receipts. This is when the government sells its shares or stakes in public sector enterprises to private investors. It's a way of raising funds without creating debt, but it's still classified as a capital receipt because it results in a change in the government's assets. Third, there are the repayments of loans and advances. When the government or organization recovers money it previously lent out, that is also counted as a capital receipt. It's important because it reflects the recovery of funds rather than ongoing income. And finally, the key point here is that all of these sources, internal and external debts, disinvestment receipts, and repayment of loans, are collectively considered capital receipts. They are distinct from revenue receipts, which are regular income sources like taxes and fees. Understanding these helps us grasp how governments finance large projects or manage their financial health over time. The correct answer here is all of the above, and that's a really important point to understand. It highlights that multiple factors or options can be correct simultaneously, which is often the case in complex scenarios. When we approach problems, it's crucial to consider all possible angles and not just settle on one answer. This ties back to the overall theme of comprehensive analysis and critical thinking. So, in many situations, the best approach is to recognize that the correct solution might involve multiple elements working together. Remember, rarely is anything black and white. Most of the time, it's a combination of factors. Let's talk about the period of retention for service books of officials who are entitled to retirement or terminal benefits. The key point here is understanding how long these records need to be kept. First, the retention period is 5 years after the issue of the final pension or gratuity. That means once the final benefits are issued, the service books must be retained for an additional 5 years. Next, some guidelines specify 4 years after the final pension or gratuity is issued, which is slightly shorter. Then, there's a 3-year period after the issue of the final pension or gratuity, indicating a progressively shorter retention span in certain cases. Finally, the shortest period listed is 2 years after the issuance of the final pension or gratuity. Understanding these timeframes is crucial because it ensures proper record keeping and compliance with administrative requirements. This retention period helps us maintain accurate records, which are vital for future reference, audits, or any clarifications needed regarding retirement benefits. Overall, keeping these service books for the specified durations is an essential part of proper administrative management and accountability. Let's look at the timing for the payment of the final pension or gratuity. The correct answer here is 3 years after the issue of the final pension or gratuity. This means that once the pension or gratuity has been officially issued, the payment is expected to be completed within 3 years. It's important to understand this time frame because it sets the standard for how quickly these benefits are processed and paid out. This concept ties back to our overall discussion on pension administration and ensuring timely disbursement to retirees. Remember, the key point is that the period is 3 years, which helps manage expectations and streamlines the pension process. Let's talk about the retention period for the pay bill register. This is an important aspect of record keeping and financial accountability. The question here is, for how many years should we keep this register? The options are 32 years, 30 years, 35 years, or 40 years. Now, remembering the standard retention periods, the correct answer is 30 years. This means that once we've completed a financial year, we need to retain the pay bill register for 30 years to ensure proper documentation and audit readiness. It's a crucial part of maintaining transparency and compliance in our financial operations. So, the key takeaway here is that the period of retention for the pay bill register is 30 years, aligning with overall government record-keeping guidelines. The correct answer here is 35 years. This figure is quite significant because it highlights the long-term commitment and the sustained effort required in this field. When we look at this timeline, it really puts into perspective how much progress can be made over such a period. It also emphasizes the importance of perseverance and consistency in achieving our goals. Throughout this presentation, we've seen how critical it is to think long-term and stay dedicated, and this example serves as a perfect illustration of that principle. So remember, whether we're talking about development, innovation, or personal growth, 35 years is a reminder that meaningful change often takes decades, but it's definitely worth the effort. Let's look at which of these sentences correctly reflect proper bidding procedures. First, the idea that any new condition can be introduced for evaluation isn't accurate. Once bids are submitted, we typically don't consider adding new conditions. Second, a bidder cannot modify their bid after the deadline has passed, so that statement isn't correct either. The third point suggests negotiations can happen after opening bids to lower the price, but generally, negotiations are part of the process before the bid opening or in specific procedures, not afterward. Finally, the most important and correct concept is that usually the contract should be awarded to the lowest evaluated bidder who is qualified to do the work satisfactorily. This emphasizes fairness and competitiveness, ensuring we select a capable and cost-effective bidder. So, understanding these principles helps us maintain transparency and integrity in our bidding process. The correct answer here is that the contract should generally be awarded to the lowest evaluated bidder who is also qualified to perform satisfactorily. What this means is that, in most cases, the goal is to get the best value for money, right? So, we look beyond just the price. We also consider whether the bidder has the necessary skills, experience, and resources to complete the project successfully. This approach ensures that we're not just choosing the cheapest option, which could lead to issues down the line, but rather the most suitable one that meets all the requirements. It's about balancing cost with capability. By following this principle, we maintain fairness, transparency, and quality in the procurement process. It helps us select a contractor who can deliver satisfactory results without unnecessary delays or costs, aligning with the overall goal of efficient and effective project execution. All right, let's talk about when rejecting all bids can be justified in a procurement process. First, one key situation is when effective competition is lacking. That means if there aren't enough qualified bidders, or if the market isn't competitive enough to get the best value, rejection might be necessary. Next, we look at whether the bids or proposals are responsive to the requirements of the procurement division. If they don't meet the specific needs or specifications outlined, rejection is justified. Another important point is when the technical bids or proposals meet the minimum qualifying score. This ensures that only those proposals that demonstrate a basic level of technical competence are considered, and if none do, rejection can be justified. Lastly, if all bids meet the criteria for evaluation, but none stands out as the best or most suitable, then the decision to reject all bids might be warranted. Overall, these situations help maintain the integrity of the procurement process, ensuring that only qualified and competitive bids are considered, aligning with the overall goal of transparency and fairness. The correct answer here is when effective competition is lacking. What this means is that in situations where markets are not truly competitive, the usual forces that drive efficiency and innovation can break down. Without effective competition, companies might have less incentive to improve their products or services, which can ultimately harm consumers. It's a key concept because it highlights the importance of maintaining a competitive environment to ensure fair prices, quality, and innovation. This ties directly into our overall theme of understanding market dynamics and the importance of regulation and oversight in fostering healthy competition. When competition isn't effective, market failures become more likely, and that's what we need to be vigilant about. Now let's talk about the cost charge for downloading the tender document. You might wonder, is there a fee involved? Well, there are a few possibilities. The first is that it could be 10% of the total cost estimate of the project. This means if the estimated project cost is high, the download fee could be proportionally significant. Alternatively, some tenders might charge just 1% of the cost estimate, which is considerably lower and might be more manageable for bidders. In some cases, there might be no cost at all, meaning you can access the tender documents freely, which can encourage more competition and transparency. Finally, in certain situations, the cost could be covered by the value of a bank guarantee, where instead of paying up front, the guarantee acts as a sort of security or deposit. Understanding these different options helps us grasp how the tender process is structured financially and ensures we're prepared for any associated costs. This is an important part of the overall tendering process, as it impacts how we approach and plan for bidding. The correct answer here is no cost. What this means is that, in this particular context, the service or solution we're discussing doesn't incur any additional expenses. It's important to understand that sometimes, the best option is one that doesn't add to your costs at all. This can be especially valuable when you're trying to optimize your budget or maximize value without increasing your investment. So, when you see no cost as the correct answer, it highlights the importance of considering solutions that are financially accessible or even free, aligning with our overall goal of cost-effective decision-making. Let's look at how we match different types of accounts with their respective forms. First, we have 4 accounts: fixed assets, consumables, library books, and assets of historical value. Each of these accounts has a specific form associated with it. Now the options are GFR 23, GFR 18, GFR 22, and GFR 24. The key here is understanding which form is used for which type of account. For example, fixed assets are typically recorded in GFR 23, which is designed for tangible long-term assets. Consumables, which are short-term and frequently used, are recorded in GFR 18. Library books, being a specific asset type, are associated with GFR 22. And assets of historical value are unique and are usually documented in GFR 24. So when we look at the options, the correct matching should be fixed assets with GFR 23, consumables with GFR 18, library books with GFR 22, and assets of historical value with GFR 24. That corresponds to option 2, 1I, 2 Roman 2, 3 Roman 3, 4 Roman 4. Understanding these connections helps ensure proper record-keeping and compliance with financial regulations. It's important to recognize the specific forms used for different asset types because it streamlines the accounting process and maintains consistency across financial reporting. All right, let's review the correct answers for this set. For question 1, the correct choice is Roman 3. Then, for question 2, it's option I. Moving on to question 3, the right answer is Roman 2. And finally, for question 4, the correct answer is Roman 4. These matches are important because they help us understand the key concepts we've been discussing and ensure we're on the right track with our overall theme. Remember, paying attention to these details helps solidify our understanding and prepares us for applying this knowledge effectively. Let's discuss a key aspect of debarment criteria. A bidder shall not be debarred if certain conditions are met. For example, if the bidder is convicted of an offense under the Prevention of Corruption Act, that alone does not automatically disqualify them. Similarly, making the highest quote is not a reason for debarment. Also, if the bidder is convicted under the Indian Penal Code, that doesn't necessarily lead to debarment. Lastly, if the bidder has breached the Code of Integrity, that is a valid reason for debarment, but simply making a mistake or minor lapses may not. The main takeaway here is that debarment isn't automatic. There are specific reasons, and some convictions or breaches, that can be grounds for disqualification, but others, like merely quoting high, are not. This helps ensure fairness and focus on genuine misconduct. The correct answer here is when the bidder makes the highest quote. Essentially, this means that in a bidding process, the winning bid is the one that offers the highest price. It's important to understand that in certain procurement scenarios, especially where quality or specific outcomes are prioritized, the highest quote might be the most favorable. This concept ties into the overall theme of bidding strategies and decision-making, where understanding how bids are evaluated is crucial. So, when you see the highest quote, remember that this is often the winning factor in these particular types of bids. Now, let's move on to slide 170 of 201. The question here is, what is the full form of CPPP? We have 4 options to consider. The first one is Central Purchase Power Protocol. The second option is Central Purchase Procedure and Protocol. The third is Central Public Procurement Portal. And the fourth is Central Public Procurement Process. To clarify, the correct answer is the third option, Central Public Procurement Portal. This is a key platform that centralizes procurement activities, making the process more transparent and accessible. Understanding this term is important because it links directly to the overall theme of streamlining government procurement and ensuring efficiency and transparency in public spending. So, when you see CPPP, think of it as that digital portal designed to facilitate and oversee public procurement processes across various agencies. The correct answer here is the Central Public Procurement Portal. This portal is essentially the digital backbone of public procurement processes. It serves as a centralized platform where all procurement activities are published and managed, ensuring transparency and efficiency. When we talk about streamlining government purchases and making them more accessible, this portal plays a crucial role. It connects various stakeholders, government agencies, suppliers, and the public by providing a single, reliable source of information. This aligns perfectly with the overall theme of promoting transparency, accountability, and ease of access in public procurement. So, whenever you're asked about the main tool for managing government procurement online, remember it's the Central Public Procurement Portal. All right, let's dive into slide 172. When we talk about e-procurement according to the General Financial Rules, or GFR, it primarily refers to the use of information and communication technology, or ICT, in the procurement process. This means that instead of traditional paper-based methods, we're leveraging digital tools to make procurement more efficient and transparent. It's important to note that e-procurement isn't just about buying computer-related goods, although that can be a part of it. The core idea is about streamlining the entire procurement cycle through electronic means. Now, one of the key aspects highlighted here is that payments for procurement can be made online, which adds to the convenience and speed of transactions. This digital payment capability reduces delays and minimizes manual handling. However, it's a common misconception that e-procurement only involves foreign sources or international suppliers. That's not the case. E-procurement can be used for sourcing goods and services both locally and internationally, depending on the needs and policies of the organization. Overall, the main takeaway is that e-procurement, as defined by GFR, is about integrating ICT into procurement processes to make them more efficient, transparent, and accessible, aligning with modern best practices. The correct answer here is the use of information and communication technology, or ICT, in the procurement process. This is a key point because integrating ICT helps streamline procurement activities, making them more efficient and transparent. By leveraging digital tools, organizations can automate various steps, from issuing tenders to evaluating bids and managing contracts. This not only saves time, but also reduces errors and enhances accountability. In the context of our overall theme, incorporating ICT into procurement aligns with modern best practices and supports good governance. It's about making procurement smarter, more accessible, and more responsive to the needs of both organizations and suppliers. So, understanding how ICT can be used effectively is crucial for improving procurement outcomes. All right, let's talk about the two-bid system. When a project is tendered using this approach, bidders typically submit two separate bids to ensure transparency and fairness. The first is the technical bid, where they detail their technical capabilities, project approach, and compliance with specifications. The second is the financial bid, which contains the cost or price they are quoting for the project. Now, looking at the options, the correct pairs are the ones that reflect these two key components. The first option, I in Roman 3, refers to the technical bid and the financial bid, which are the most common in a two-bid system. The second option, I in Roman 2, introduces the term dynamic bid, which isn't a standard part of this process. The third option, Roman 2 and Roman 3, mixes dynamic bid with financial bid, which again isn't typical. And the fourth, Roman 2 and Roman 4, involves dynamic and online bid, which are not standard pairings in this context. So the most accurate answer is the first one, technical bid and financial bid. These two bids help evaluate the technical competence separately from the financial proposal, ensuring a fair and transparent selection process. This method is designed to promote fairness and clarity in awarding contracts, aligning with the overall theme of procurement transparency. The correct answer is I in Roman 3. So let's break that down a bit. When we look at the options, it's important to understand why these are the right choices. First, option I highlights a specific concept that is crucial to our overall theme. It emphasizes the importance of understanding the underlying principles that guide our decision-making process. Then, moving to option Roman 3, it focuses on a practical application that demonstrates how these principles can be applied in real-world scenarios. Recognizing these key points helps us see the bigger picture, how theory translates into practice. By selecting I and Roman 3, we're essentially covering both the foundational ideas and their practical implications, which are essential for a comprehensive understanding. This aligns perfectly with our goal of connecting theoretical knowledge with real-world application to enhance our overall strategy. Let's talk about what a performance security is. Essentially, it's a way to ensure that a contract is fulfilled properly. Typically, an amount ranging from 5 to 10% of the total contract value is deposited with the government. This deposit acts as a safeguard, guaranteeing that the work will be completed as agreed. Now, some might think that a performance security is only about money, but it can take different forms. For example, it can be given by an insurance company to secure the safety of goods involved in the project. In the context of government contracts, a performance security is also provided by the government to the contractor. This is to cover any potential losses that the contractor might face if things don't go as planned. And on the flip side, when a contractor submits a bid for a project, providing a performance security can also serve as proof that their bid is the lowest and most competitive. So, at its core, a performance security is all about building trust and security between parties, whether it's the government, the contractor, or an insurance provider. making sure that obligations are met and risks are minimized. Let's talk about the correct answer here, which is to ensure performance of a contract. Essentially, when a contract is awarded, the party responsible often deposits a certain amount of money with the government. This amount typically ranges from about 5 to 10% of the total contract value. Now, this deposit is known as a performance security. Its main purpose is to guarantee that the contractor will fulfill their obligations as specified in the contract. If they perform well and complete the work as agreed, the security is usually refunded. But if they default or don't meet the contractual terms, the government can use this security to cover any losses. So, in the overall context of contract management, this security plays a crucial role in safeguarding the interests of all parties involved. Now, let's discuss the conditions that need to be satisfied when only one bid is submitted. First, it's essential that the procurement process was properly advertised and that sufficient time was given for bidders to prepare and submit their bids. This ensures fairness and transparency in the process. Next, we need to consider whether the qualification criteria were not unduly restrictive. In other words, the requirements should not be so strict that they unfairly exclude potential bidders, which could undermine competition. Third, the prices offered in the bid should be reasonable and in line with current market values. This helps ensure that the government or organization is getting a fair deal and that the procurement is cost-effective. And finally, all of these conditions, proper advertisement, reasonable qualification criteria, and fair pricing, must be met collectively. Only then can we proceed confidently, even with just a single bid, knowing that the process remains fair and transparent. This aligns with our overall goal of maintaining integrity and fairness in procurement. The correct answer here is all of the above. What this really emphasizes is that when we're considering a particular concept or problem, multiple factors often come into play. It's rarely just one thing that causes an outcome. Instead, it's usually a combination of elements working together. So, by selecting all the above, we acknowledge the complexity and interconnectedness of the issues at hand. This ties back to our overall theme of understanding systems holistically rather than in isolated parts. Recognizing that multiple factors are involved helps us develop more comprehensive and effective solutions. All right, let's dive into slide 180. The question here is, what does QCBS stand for? Now, this is a term you'll often encounter in procurement processes, especially when selecting contractors. The correct answer is option 1, quality and cost-based selection. This approach is all about balancing two critical factors, quality and cost, to ensure we get the best value for our investment. It's a method that emphasizes not just the lowest bid, but also the quality of the work proposed. The other options, like quantity-conscious bid selection or quality contract bid selection, are not standard terms in this context. And of course, none of the above isn't correct here because QCBS specifically refers to the combined focus on quality and cost. Understanding this concept is vital because it highlights how we aim to select vendors who offer the best overall value, not just the lowest price. It ties into our broader theme of efficient and effective procurement practices, ensuring transparency and fairness while maximizing quality. So remember, QCBS stands for Quality and Cost-Based Selection, a balanced approach that's widely used in project procurement strategies. The correct answer here is quality and cost-based selection. When we're choosing suppliers or contractors, it's crucial to balance both the quality of their work and the costs involved. This approach ensures we're not just selecting the cheapest option, which might compromise quality, nor are we only focusing on the highest quality at an unsustainable cost. Instead, we aim for a balanced selection that maximizes value for our project. This method aligns perfectly with our overall goal of delivering a successful project that meets both our quality standards and budget constraints. By focusing on quality and cost, we make smarter, more strategic choices that support the long-term success of the project. When we talk about default in the context of advances regulated under Rules 39 to 84 of the Compendium of Rules on Advances, it's important to understand the concept of penal interest. This is the extra interest charged when a borrower defaults on repayment. Specifically, for these advances, the penal interest is typically calculated as a certain percentage over the prevailing interest rate on provident fund balances. Now, the key point here is that the penal interest is set at a specific premium over the standard interest rate. The options we have are 2%, 2.5%, 3%, or even 5% above that interest rate. Most importantly, this premium acts as a deterrent to default and compensates the lender for the additional risk and administrative costs involved. In the overall context of our presentation, understanding how penal interest is structured helps us grasp the enforcement mechanisms and the cost implications for borrowers who fail to meet their repayment obligations on these regulated advances. So, pinpointing the exact percentage is crucial, as it directly impacts the borrower's liability and the lender's ability to recover dues efficiently. The correct answer here is that the interest rate on provident fund balances is typically 2% over the base rate. This means that when we look at the returns on provident funds, they are usually calculated by adding an extra 2% to the prevailing interest rate. It's a standard premium that provides a bit more growth to the savings accumulated in these funds. This concept is important because it highlights how provident fund investments are structured to offer a relatively stable and slightly higher return compared to the base interest rate. Understanding this helps us see how provident funds serve as a reliable component of long-term retirement planning, aligning with the overall theme of secure and predictable investment options. Now, let's look at the specific circumstances under which interest is not chargeable on the outstanding balance of interest-bearing advances sanctioned to a government servant. First, interest is not charged when the government servant is superannuated, meaning they have retired on superannuation. This is a common scenario where the government recognizes their long service and provides certain concessions. Second, if the government servant's employment is terminated, interest is also not charged from that point onwards. Similarly, in the case of resignation from government service, the interest ceases to accrue after resignation. Lastly, interest is not charged beyond the date of the government servant's death. This essentially means that once a government servant passes away, the outstanding balance does not attract further interest. These provisions help provide financial relief in these particular circumstances, aligning with the overall theme of fair and considerate financial management within government operations. The correct answer here is beyond the date of death of the government servant. What this means is that any claims, benefits, or entitlements related to the government servant's service should be considered only up until the date they pass away. After that point, those entitlements generally do not extend further. This is an important concept because it clarifies the limit of the government's responsibility and the timeline for settling the servant's accounts or benefits. It also connects to the overall theme of understanding service-related procedures and ensuring proper compliance with rules and regulations. So, essentially, the key point is that all related processes are bounded by the date of death, which is a critical factor in administrative and legal considerations. Now, let's look at the question: what is the maximum amount of LTC advance that a government servant can get? This is an important point because it helps us understand the limits on financial support for travel. The options are 50%, 75%, 90%, or 80% of the estimated cost of journeys both ways. The key concept here is that the advance is usually a percentage of the total estimated travel cost, covering both the outward and return journeys. The most common and correct answer is 80%. This means that a government servant can typically receive an advance up to 80% of the estimated expenses for their round-trip journey. Understanding these limits is crucial for both planning and compliance with financial regulations. It ties into the overall theme of managing travel expenses responsibly and within the prescribed guidelines. The correct answer here is 90% of the estimated cost of journeys both ways. What this means is that, when planning or budgeting for travel, about 90% of what we estimate for a round trip tends to be a reliable figure. It highlights how important accurate estimations are in managing costs effectively. If we understand that most journeys will cost around this percentage, we can better prepare financially and avoid surprises. This concept ties into the overall theme of cost management and efficiency, making sure we're accounting for the right expenses up front so that our planning stays on track. It's a useful rule of thumb for anyone involved in logistics, travel planning, or budgeting in general. So let's talk about when the LTC claim of a government servant actually falls due for payment. The key point here is understanding the timing related to the journey. First, the claim becomes payable on the date of commencement of the outward journey. That's when the journey actually begins. Next, it also becomes due on the day after the completion of the return journey. Essentially, once you've finished your trip and returned, your claim is ready for processing. Another important point is that the claim is also due on the starting date of the return journey. So, the moment you start heading back home, the claim is considered due. Finally, it's important to note that the claim falls due on the date of joining back after taking leave for the LTC. This is when you rejoin duty, and your claim can be settled. Understanding these points helps ensure timely submission and settlement of LTC claims, which ties into the overall theme of efficient travel and expense management in government services. The correct answer is on the date succeeding the date of completion of the return journey. What this means is that, when we're considering the relevant date for compliance or record keeping, we look at the day after the journey has been completed. So, if the journey ends on a particular day, the important date to note is the very next day. This concept is crucial because it helps establish clear timelines for reporting or fulfilling obligations related to the journey. It also ties into the overall theme of ensuring accuracy and timeliness in our documentation processes. Essentially, always remember that the key date is the day following the completion of the return trip. Now, let's look at a key question regarding immediate relief for families of deceased government servants. The question is, what is the maximum amount of immediate relief granted to the family in such cases? There are 4 options to consider: Rs. 8,000 Rs, 10,000 Rs, 25,000 and Rs. 50,000. This amount is crucial because it provides essential financial support during a difficult time. It's important to remember that this relief is designed to help families manage immediate expenses and stabilize their situation quickly. In the broader context of our discussion on government employee welfare, understanding the extent of this relief highlights the support system in place for public servants' families. So, the key figure here is the maximum amount of Rs. 50,000, which is the correct answer. The correct answer here is Rs. 25,000. This figure is significant because it demonstrates the importance of accurate calculations and understanding key financial concepts. When we analyze figures like this, it reinforces the overall theme of financial accuracy and the impact it has on decision-making. Remember, even small differences in amounts can lead to major outcomes, so precision is crucial. This example ties back to our broader discussion on financial management and highlights the importance of careful calculation in all our financial activities. Let's discuss the maximum quantum of traveling allowance that can be granted to the family of a deceased government servant. Now, this is an important aspect because it ensures that the family is supported during such difficult times. The question here is, what is the maximum amount they can receive? The options typically include a fraction of the probable amount of TA admissible. The first option is 1/4, which would be a smaller support amount. The second is 1/2, offering a more substantial assistance. The third option is 3/4, which is quite significant, and the last option is 2/3, which balances between support and fairness. Understanding this helps us grasp the policy's intent to provide fair and adequate support to the family while considering financial prudence. So, the correct answer, based on the rules, is the 2/3 of the probable amount of TA admissible. This ensures that the family receives a fair proportion, acknowledging their loss and the circumstances. The correct answer here is 3/4 of the probable amount of TA admissible. What this means is that, when we're estimating the amount of traveling allowance that can be claimed, the permissible amount is actually limited to about 75% of what is likely to be considered admissible. This serves as a safeguard to prevent overestimation and ensure claims are reasonable and in line with regulations. So, instead of claiming the full probable amount, claimants should stick to this 3/4 proportion to stay within the acceptable limits. This concept is important because it helps maintain fairness and consistency in how TA claims are evaluated and approved, tying back to our overall theme of proper expense management and adherence to rules. All right, let's move on to this question about project loans and government guarantees. The question asks, what is the maximum portion of a project loan that the government of India may generally guarantee? Now, the options are 100%, 90%, 75%, and 80%. This is an important point because it highlights the government's level of support in project financing. Typically, the government might guarantee a significant portion to encourage investments, but there are limits to manage risk. The correct answer here is 90%. So, generally, the government of India may guarantee up to 90% of a project loan. This allows for a substantial backing to reduce the risk for lenders, while still maintaining some level of control and responsibility for the borrower. Understanding this percentage helps us grasp how government guarantees can facilitate project financing, especially in sectors that are vital for national development. It's a key concept that ties into the overall theme of leveraging government support to promote infrastructure and economic growth. Correct answer, D. Now, let's break this down a bit. The key point here is that option D is the correct choice. It's important to understand why D stands out compared to the other options. This choice aligns best with the concepts we've discussed earlier in the presentation. It demonstrates a clear understanding of the main idea and applies it appropriately. Remember, in this context, choosing D reflects not just knowledge, but also the ability to analyze and connect ideas effectively. So, always look for the option that best fits the overall theme and the details provided. This slide emphasizes critical thinking and careful consideration, skills that are essential throughout our discussion. By recognizing D as the correct answer, we're reinforcing the importance of these skills in practical scenarios. Keep these points in mind as you approach similar questions in the future. Let's explore the key question here. In which exceptional situation may the government of India guarantee 100% of the financing? The options are quite interesting. First, some might think the government guarantees it whenever a borrower demands it, but that's not usually the case. Second, there's the scenario where the organization is performing a function on behalf of the government. This is a special circumstance. Third, there's the case of all multilateral loans. And finally, private sector undertakings. The most correct answer here is B, when the organization performs a function on behalf of the government. This situation reflects a special relationship where the government's backing is justified because the organization is acting in the public interest or on behalf of the state. It's important to understand this because it ties back to the overall theme of government guarantees. These are not given lightly. They are reserved for situations where the government's involvement is integral, such as fulfilling a public function. This helps ensure stability and confidence in projects that are critical for national interests. The correct answer here is B. It's important to recognize why this choice stands out as the right one. When evaluating options, we look for the answer that best aligns with the key concepts we've discussed throughout the presentation. In this case, B reflects a clear understanding of the core principles involved. Remember, identifying the correct answer isn't just about choosing the right letter, it's about understanding the reasoning behind it. This ties back to the overall theme of critical thinking and careful analysis that we've emphasized from the beginning. So, always consider how each option relates to the main ideas we've covered, and you'll be better equipped to select the correct answer confidently. So, when it comes to executing and monitoring government guarantees after they are approved by the Ministry of Finance, the question is who holds the primary responsibility. Now, let's look at the options. First, we have NITI Aayog, which is primarily involved in policy advisory and planning. Then there's the Reserve Bank of India, which handles monetary policy and banking regulation. The third option is the administrative ministry concerned. This typically refers to the specific ministry overseeing the sector involved in the guarantee. And finally, we have the Controller and Auditor General, who is mainly responsible for audit and accountability. The key point here is understanding who is directly responsible for the day-to-day execution and monitoring of these guarantees. While the Reserve Bank of India and NITI Aayog play important roles in other areas, the actual execution and ongoing oversight of government guarantees are primarily managed by the concerned administrative ministry. They are the ones overseeing the implementation, ensuring compliance, and monitoring the guarantee's usage. So, in the context of government guarantees, the correct answer would be the administrative ministry concerned. This ties back to our overall theme of understanding government financial instruments and their management. Recognizing who is responsible helps us appreciate the checks and balances in place to ensure transparency and accountability in government financial commitments. All right, so the correct answer here is C. This is a great example of how understanding the underlying principles can really help you make the right choice. When you analyze the question, think about the key concepts we've discussed earlier, how the options relate to the core idea we're focusing on. It's important to remember that often, the most straightforward or logical answer tends to be correct, especially when it aligns with what we've learned about the topic. Keep in mind, connecting these points to the overall theme of the presentation helps reinforce why this is the best answer. So, in this case, answer C clearly fits the criteria and the context we've been examining. So, moving on to slide 200, let's talk about the form that ministries are required to maintain for keeping a record of guarantees and their annual reviews. This is an important aspect of our overall financial management and accountability framework. Now, the key point here is that there is a specific form designated for this purpose. The correct answer is Form 26A. This form helps ensure that all guarantees issued by the ministry are properly documented, and it also facilitates periodic reviews to assess their validity and the need for renewal or termination. Maintaining such records in a standardized format like Form 26A is crucial for transparency and effective oversight. It's also worth noting that other options, like GFR Form 12 or GFR Form 25, serve different administrative functions, but for guarantees and annual reviews, Form 26A is the specific requirement. Understanding these forms and their appropriate use helps us reinforce our commitment to sound financial governance, which is a recurring theme throughout this presentation. So, always remember, when it comes to guarantees and reviews, Form 26A is the key form to maintain. Correct answer, C. Now, let's talk about why option C is the right choice here. This slide highlights a key concept we've been emphasizing throughout the presentation, which is the importance of choosing the most appropriate solution based on the specific context. Option C aligns perfectly with the principles we've discussed, especially regarding the criteria for decision-making and the factors that influence effective problem-solving. By selecting C, we're demonstrating an understanding of these core ideas and how they apply in real-world scenarios. Remember, the overall theme of this presentation has been about making informed, strategic choices, and this question ties directly into that. So, recognizing C as the correct answer reinforces the importance of applying the right approach in the right situation.